Good morning.
Hello, hello, good morning. I'm Amelia.
Yes, I'm Jason. We just wanted to have an informal kickoff, let you know what you're going to see if you haven't been today or if you didn't see everything yesterday, and maybe just reflect on a few things. Is the clicker working? Oh, it is on the side. Sorry. So first of all, thanks for everyone for coming back, the 7th SaaStr Annual. So I'm glad we're able to get back together, which is pretty cool after a slight gap in digital events. So pretty cool. So just a quick fun look at our history that I grabbed from one of our documents online. But this is actually like the 9th year of SaaStr as a community. We started as a blog back in 2012. We built up, we started doing meetups for a couple of years, and then 5 years of SaaStr Annual, and then, you know, the night before the 2020 Annual, we had the first big event we had to cancel, lost 10 million, stranded a few folks that had flown here from every country in the world. And yeah, there's that little section in 2020. What does that say at the bottom, Amelia?
That's a little global pandemic.
Global pandemic during 2020. But thanks to everyone, we did kind of turn that into a positive. We were not into digital events. We thought they were boring, and but we ended up doing 12 of them, and we had just about every cloud leader do them. And you know, we didn't do them as we really did them as learning sessions on steroids, and so we'll keep doing those as we kind of transition back. And on the right, you can see finally we're back to the IRL here.
And there are people watching on the internet, so hello out there.
There are people watching on the internet, yes.
I'm
we
sorry
thought streaming was dumb. We thought streaming and all that was dumb, but we are back. So thanks for everyone for supporting us. For 9 years, we survived and thrived through this together. Yeah, everyone agrees we're number one. Just a quick sense, at least what the demographics are likely here for meeting folks, and we'll talk a little bit about meeting folks. Or maybe, Amelia, you walk us through who's here.
Yeah, sure, of course. So obviously a lot of you are founders and CEOs who have started your own companies that are here today. So that's the majority of our audience. Right after that, though, we have a lot of revenue leaders. So that's our next up and coming there. So a lot of VPs of sales, lots of VPs of marketing. So if you're hiring, you came to the right place. It's probably a better place to hire than all the Zooms. Sorry, Eric, I love Zoom, but this is a little different. And then we have a big mix there of attendees by role. So if you're looking for a product person, if you're looking for an investor, we've got Meet a VC Day tomorrow, which we'll talk about in a moment. Lots of ops and CS folks, so plenty of people to meet with and network that are either like-minded or maybe even a stage above you, given our breakdowns of the number of employees and company sizes that are represented at this year's annual.
Cool. Yeah, again, just a quick look back at where we were the last time we got together. TechCrunch made this great piece, postponed it as officials discourage large gatherings. We thought we would be back in a couple months after March 2020 for what we called biannual. We pretty much thought we'd all be back in the office by May 2020, but clearly the world changed a lot. But again, thanks for your support. Just a couple things. If you haven't been here today, Amelia, you can walk it through it, but we're expanding our footprint today. If you're here yesterday, there were the 3 stages here, right?
Yep.
But today we're expanding to 5, right, Amelia?
Exactly. So whether this is your first day or your second day back, welcome back. So a lot of you right now, you're at stage A, just to get your bearings. You're at the stage A masters. Right through there, you'll see the sponsors we love area that has our cantina. That's where the food is, the snacks. Right behind it, you'll see the cantina stage. That's the one with the SaaStr neon sign on it. A lot of great speakers there today doing deep dives from the desk of, and then Stage B Legends is right behind it. And then as you go out more into our property, it is 40 acres, so I know a lot of you have got sunglasses on. Great, you read our instructions. I know Bay Area weather is a little bipolar sometimes. But as you go more into the campus, you'll see right behind you is our birds of a feather networking area. That's where you can schedule a brain date. So if you're looking to connect with folks that you don't know yet, definitely book a brain date. There's still time to do that. There's some lovely folks there that will check you in. They'll help you book a brain date if you haven't already. Right next to it, it's one of our only indoor spaces. It's the co-working space. So if you need to take a phone call, do some work, charge up your laptop, that's a great place to do it out there. Our tips and tricks boards and our jobs boards are in there as well. So be sure to post your job or your tip for the community there. Right behind that, we will have puppies in the afternoon in our large SaaStr Square Park area. So there's another jazz band out there. You'll see the sponsors we love stage. That's the one with the lamp posts and all the brick wall out there. We'll be doing 10-minute product showcases all day long there, so jam-pack. The Midway Picnic, I'm sure you guys have seen, that's got some basketball games, lots of tables, lots of food will be there throughout the day. We've got some fun Airstreams. And then last but not least, our Plaza stage. So that's the really big one in the back. There's a large tent over it. You can't miss it.
Right. So new stages, the smaller one out there, the sponsor stage, which folks won't miss in the Midway. That one's pretty fun. Relax there. And then the Plaza stage is lit up. That's the furthest walk,
it's
right?
Lit
That's
up.
actually the biggest stage, right? Yeah.
It is fairly large.
Okay. And then at the end of the evening, everyone will be up, and then the concert with Cash Cash is here in this room, or where is it?
The concert with Cash Cash is here tonight.
Tonight in here.
So
okay.
content will end right up. Yeah, Cash Cash guy. Like, not only are we back for a business conference, but also for a concert. So we'll have content all day until 4. We'll go right into happy hour in the Sponsors We Love Expo Hall, and then right at 6 as happy hour is ending, you'll come here for Cash Cash.
Okay, and then briefly, because it's cool, but sometimes the app is confusing. Brain dates. First of all, before we talk about it, how many did we have yesterday? We had 200 and something?
Yeah, we had over 250 already.
Okay, so if you guys haven't done brain dates before with us, they are one-on-1, one-on-4, one-on-20, or even bigger sessions on micro topics in general. They're running all the time we're here. You can also do one yourself if you want. It's not too late to register.
Yeah.
But if you can, the app is linked in the mobile app. There's a link for brain date, but you don't even have to do that. You can just walk over right here behind, and there's 2 desks on either side of this alley.
Exactly.
And you can just check in with them and pick a session you want to join. So
there's over 1,000 people in it.
There's over 1,000 people in the system. Yeah. So if you want, these great sessions are great, and you're going to see so many incredible CEOs and VPs of sales and VP of marketing. But if you're so inclined, do a couple small sessions. You can learn and meet. You can actually meet more people in these sessions. And especially if you're here solo and you're a little introvert like me, doing a few brain dates is sort of like a natural win. So you don't figure it out on the app if you want to just literally walk over there and sign up for them. And so let's just walk you through today and then and especially tomorrow. So what's happening today, Amelia?
Well, it's jam-packed. I know we've got a dedicated slide after this of what's happening immediately after. We'll have Databricks, Datadog, Vimeo, everything from A to Z today. Lots of content on all 5 stages throughout the entire day. We've got Klaviyo, deep dives, the CRO of Build.com in the afternoon, kicking off our SaaStrU workshops. So those are super tactical sessions in the afternoon. And also the CRO of Hootsuite, Stripe, and much more. Got it.
So yeah, we've got the most sort of big name CEOs and founders on stage in the morning, legends of SaaS, and then we call it SaaStrU. There'll be lots of bigger sessions, but with revenue leaders that you can learn from. If you were here yesterday, you know some of the ones from Mark Roberge or the CMO panel were pretty awesome. We'll have that on steroids today. $9.5 billion Klaviyo head of marketing, Bill.com, which is one of the great S&B success stories, but there's a ton of them all this afternoon. So this is the most jam-packed day.
Yeah, pace yourself.
And then tomorrow, Amelia can kick it off, but probably if you're a founder or a founder-ish or a founder-to-be and not a VC, you can come in the morning to Founder Confidential to kick off tomorrow, which is probably going to be one of the most iconic things here, right?
Yeah, we've done this a few times now. It's always our most popular thing we do at SaaStr Annual, so a good reason to come back bright and early tomorrow morning for Founder Confidential.
Not that early. What time?
I mean, 9:30.
9:30, okay.
It's early for most of us.
So you'll come in at the big stage, the Playa stage,
exactly.
For Founder Confidential, right?
Yes, we'll do Founder Confidential. We've got a lot of CEOs at different stages that we pulled together to share their secrets of fundraising, what it took to get term sheets, and on raising their next round.
Yep, and you can ask, it's for fun, but you can ask any question you want in the big session on the panel, and then everyone's going to walk back to the brain date session over here?
Yes, we'll walk over to the brain date section for the dedicated Meet a VC. So I know a lot of you guys were asking us yesterday, hey, how can I've heard people have got funded at SaaStr, how can I do that?
Yep.
That would be through our Meet a VC program. It's not too late. You can sign up for it today. You can sign up in the app in the agenda. There's various brain dates that are Meet a VCs, and then there are a lot of workshops that are Meet a VCs. So a lot of VC content we focused on tomorrow.
So just to slow it down for a minute, so you can sign up on the app or the website for Meet a VC. We have 200 and something VCs participating in it, right?
Exactly, yeah.
And then they will review you. They'll get all your information. And then on the brain dates here to meet in a structured fashion with VCs, we've probably got 20 or 30 sessions,
Exactly.
don't we,
Yep.
with a lot of the top funds where you can do smaller sessions and get to know them. And it's great if you're fundraising and want to raise money, but it's also a great chance just to learn, to ask questions from these small sessions. And even for folks, if you're a little bit, if you're pre-revenue, it's one thing. But even if you're at the A stage or long, we actually have a lot of growth investors here. So it's a great time to meet the Iconics, the Tigers, the other folks that could write you a small $100, $200, $300, $400 million check in a year or two when you're ready. There are actually quite a few of them here. And beyond meeting this tomorrow morning through lunch is the best time. And then after these brain dates down here, going to walk back to the playa and have more informal lunches with different VCs.
Yeah,
right?
we'll do informal roundtables all together. So even if you didn't sign up, no worries. Just come on by. Our team will help you get checked in. We've got a great team leading our Founder Confidential this year.
Yep. So it's a whole package of stuff to do for founders and founders-to-be with VCs from 9:30 to lunch tomorrow. Just walk over to Playa and check out the app and go in. And then in the afternoon, if that's not enough fundraising content, every year, one of the 2 or 3 most popular sessions is State of the Cloud with Bessemer Venture Partners, and so it's back for like the 6th time or something like that?
Yeah, the 6th time. This year they're going to do the 2021 edition. They're going to reveal it tomorrow. It's how to build a cloud unicorn. So fresh to be revealed tomorrow.
Okay. And so anyhow, check it out. There'll be more. Today's the most big sessions. Tomorrow, everything gets smaller and more compact so you can have more intimate, smaller conversations, right?
Exactly.
And then anything else we want to add on the agenda?
No, I think pace yourself. It is outside. We're happy that you're all back. It's great to see everyone.
So I just had a couple quick notes just to reflect. Some of this is obvious, but these are just for what it's worth, what I've been thinking of since last time we got together. If you don't follow the public markets, this chart on the bottom right is where the BVP NASDAQ Cloud Index, the Bessemer team will talk about this tomorrow. But I mean, it is essentially, the market is essentially tripled since the last time we got together for cloud stocks, and it's up 1,223% since we started SaaStr Annual. So the market's great, but cloud is so much bigger. But I think we don't know. I think a lot of the conversations this week and going forward are what is everything going to look like, right? Investing, hiring, resigning over Zoom. I mean, how many folks here have had someone randomly on their team just quit over Zoom with 0 minutes of notice? Is it nobody? Is it great resignation? Has it happened? Anyone not had that happen? Raise your arm if you haven't had it happen. So that's crazy. The checks being written over Zoom, hiring, we're all, even though we're together in some cases for the first time in 2 years, we're all running distributed teams. And how many of us plan to run a distributed team? Probably 10% of us, right? We never plan this. You plan. Well, there's a few. But we're still learning this playbook, right? And soon, this is, that's crazy. We'll soon have 1,000 unicorns in cloud. So it's so much change. And we'll talk about it all day. In particular, I'm going to do a session with Aaron Levie from Box later this morning. And Box is one of the, the classic first-generation cloud leaders. And we're going to talk about what he's seen and learning and, really how we can all take advantage of it and how big it's going to be. So just to help us, to help SaaStr, this is our first outdoor annual. It will be back here again next July, right?
Right.
Even bigger and more outdoors. Half the world can't come this year because of visa limitations. So this annual will be about as big as 2019.
Right, yeah.
Right? But imagine when the rest of the world can come. So it'll probably be twice to 2.5 times its size next summer in July. But that's interesting to learn, but we're learning. Like even SaaStr Annual is being rebooted, and SaaStr as a community, which you're part of, a learning community, is being rebooted. And when we started this 9 years ago, there were like this many SaaS experts out there, right? Now there's thousands of them. So help us learn what more you want. Email us, email me, tweet me, whatever, and fill out our feedback form at the end of this, and tell us what more we can do to help. We want to do more with all the experts we have. We want to do more in this community. The one thing we will do is we will kind of start to formalize a growth program, which will start this Meet a VC stuff you'll come to tomorrow. We'll start actually to formalize that all year round. So that program will continue. We'll continue to help you fundraise and meet VCs all year round. And include that. We already have dozens of VCs that want to help and do that. We'll do more for growth to help you learn how to grow faster. But we need your feedback in general on what more you want out of SaaStr. And then I think what more you want out of meetings. And just one thing to think about as part of the community is we would love this idea as we all run the distributed teams if a bunch of folks would bring their entire teams together during the week of annual, right? And so we'll do whatever it takes to tell us if you think that's a good idea. We'll create extra meeting spaces for you, or like super insanely discounted passes for 72 people, or whatever it is. But it could be great if you're going to get together once a quarter, every 60 days with your teams. Why shouldn't it be here? And why shouldn't they all come and learn? And so we'd love it if like 200 SaaS companies next year, cloud companies, brought their entire teams here. So if you think that's a cool idea and have ideas how to help do it, let us know, because we would love to do that. So just let us know what you want, because it's a different world now. And then one other thing I thought, there's a lot we could chat about, but there's one thing I really thought that maybe we've all missed since COVID, and it's maybe my one challenge. And we talked about this a little bit at our equality brunch yesterday, right? But I really feel like we've taken a step back on inclusion since March 2020. And if you look at this tweet from yesterday, for the first 8 months of 2021, companies with solely female founders were 2.2% per country. It's the lowest in 5 years, right? Some steps back. And what happened? I don't claim to be an expert, and I am clearly a white male of privilege myself. Amelia, feel free to chime in. But what became clear after COVID hit was, you didn't have to fly to Sand Hill or South Park to raise money and burn weeks. You could fund over Zoom, but immediately everyone wanted to fund who they knew, right? They wanted to fund insiders. And there's every day there's a huge round on TechCrunch, and especially post-COVID, though, it was all into folks we already knew. It was into companies that were already new. So it really focused money into those folks that had access, that had privilege, that had a network. I'm not sure that's completely changed. It's changed somewhat. I'm not sure it's totally changed. Having investors invest without ever meet people has not necessarily improved things for many folks. Another one which, when I talk with founders, I think we should acknowledge is that there's been some out of sight, out of mindness as we've worked over Zoom. Like issues, pre-COVID, walking into an office that was all dudes, were you comfortable?
Not really.
Not really. I know I wasn't comfortable. These non-diverse environments, I think in many ways, for many companies, you could sweep it under the rug a little bit when they're just heads over Zoom. I know this is true, right? And I would say the third point, if I had to summarize all the companies I've talked to and worked with since COVID, I think on inclusion in general, there's a lot more progress as companies get ready to IPO. There's a lot more. I'm not saying it's dramatically better, but I would say it's somewhat better. Again, challenge me for folks that know more in the audience. I think there's more progress there and more resources, but I think there's less than pre-COVID for startups. So my only advice, again, a white male of privilege that's just trying to play a small piece. I know we can do more. I think there has been a step back here, and be cognizant of it. Challenge us all to do better here. So with that, we're kicking it off on the big sessions. Well, yes, do better. Yeah, well, there you go. By all means. Really, you can. If nothing else, come back. If you agree with those statements, come back after annual and say, how can we be more inclusive? Because living over Zoom is not a total improvement. So Amelia, what are the next sessions we have to kick off the big day here? Yeah,
it's a jam-packed day of content, like we said, all 5 stages. I think we've got about 75 different speakers throughout the day. So come back, actually, right here. You don't have to go anywhere. You can
don't leave.
Don't leave.
For the first of the big sessions. What's the next session?
Yeah, it's with the CEO of Vimeo. It's Anjali Sud. She's going to be talking about how Vimeo went from B2C to billions right here on this stage.
Okay. This is a great session for folks. Anjali and I just did our podcast, if you happen to listen to it. It's a great story. First of all, it's really interesting to hear someone that came up through marketing to CEO. That should be pretty common, but actually it's less common, and so she's got a really great perspective. And if you're going more enterprise, or if you're product-led growth or have a large base, Vimeo, if you're not aware of Vimeo, you sort of know it as a video service, but it's a 330 million ARR company with a pretty big enterprise contingent. And Anjali will talk about it. 2 years ago, they didn't have a sales team. So Vimeo's a lot like a lot of us that are kind of SMB going enterprise. They just happen to be doing 330 million, growing something like 60%, and had a big IPO. So if that feels like you, if you're SMB going enterprise or product-led growth, stay here for that session, right?
Stay here for that.
And then if you're more enterprise, open source, big deals, what's the next big session we have?
Yes, that's with the CEO of Databricks, Ali Ghodsi. He'll be on the Plaza stage, so that's the big one in the back.
Yes. So Databricks, 35 billion, one of the most successful post-open source, commercial open source enterprise solutions. If you want to learn how to close big deals, if you want to learn how to do what had built what will be a $100 billion company. It's incredible to have Ollie here. And so we'll take a break in a minute, but there's 3 sessions now. Stay here if you're sort of B2C freemium product-led growth. If you're a little more enterprise and big deals, it's amazing to have the CEO of Databricks over here.
Right.
And if you want to know about software in general, we've got the CMO of G2 right over here as a 3rd session. So
that's right, yeah. The CMO, Amanda Malko of G2, will be on stage B, so right over here talking about the future of buying in the enterprise and just software in general, which obviously has changed a lot in the last 18 months.
Great. So thanks, everyone. We'll let you go to it. If you want, stay here or pick your session, but at least go to one session this morning, even if you chat all day. Yeah. Thanks, everybody.
Enjoy SaaStr.
morning, everyone.
This is the nicest chair I've sat in since the pandemic. It's very fancy.
Like the desk. Good to be here with everyone. My name is Ren Thill. I'm an equities research analyst at Jefferies, covering cloud and internet stories. With me is the CEO of Vimeo, Anjali Sud, become the CEO in 2017 at the age of 34. Is responsible for transforming Vimeo from an entertainment destination to a powerhouse in video, covering every size of business with over 230 million end users. In the past 18 months, video usage has grown exponentially in the face of COVID, and the market continues to see an elevated demand for all things video. I would highlight downloading Vimeo Create. It's an unbelievable experience that I'm driving all my family videos on.
I did not pay him to say that.
That was my own plug. Thanks for joining everyone today. Maybe just to dive in, Anjali, there's some of the audience that hear Vimeo and think indie YouTube, the platform for creators, but you and the team have made it clear Vimeo is not that. So what is Vimeo in 2021?
Yeah, we are no longer the indie ad-free version of YouTube. For the last 4 years, we've really pivoted and been focused on a different strategy, which is being the professional video software solution for every business in the world. And by that, I mean, if you think about the power of professional quality video, why aren't we using it every day at work? Why isn't every business and marketer posting every post on social media using video? Why isn't your website full of customer testimonials and product demos and support help articles that are video based? Why aren't we sending asynchronous video messages instead of scheduling that meeting, or doing creative brainstorming using video? And for the most part, the reason is just that it's been too hard. It's been too complex, too time-consuming, too intimidating, and the ecosystem was never designed to help every employee in the world be a content creator. And ultimately, that is what we at Vimeo are trying to do. We're trying to bring the power of professional quality video to every employee and every team. And we're doing that by building a solution that helps you create content, collaborate and share that content, and connect with your audience securely, all in a really simple, intuitive, accessible solution. And it's been a really incredible journey. I know many folks here are probably in the earlier stages of building your software startup. But for Vimeo, we're a 16-year-old platform, but I think of us as a few-year-old enterprise software startup, because in many ways, the challenges that we've been facing have been really similar. How do you launch whole new products and solutions to go after a market? How do you get product market fit? How do you scale? How do you focus and prioritize when you have lots of different users to serve? How do you monetize? These are all the things that we have also been challenged by, and so I'm excited to kind of share more about what we've learned with you all today.
Let's dig into the moment in 2017. You became the CEO. You moved forward in transforming the company from a product strategy, within a product strategy, while not being a coder or engineer. Under your stewardship, Vimeo took a hard left from becoming a consumer entertainment destination to pursue a B2B video solution offering. What were the signals that this was a good idea?
It's funny because we sit here today and it seems really obvious that, of course, companies are going to use video to communicate with their distributed teams. But back in 2017, it was really not obvious. And the things that we saw that gave me and the team a lot of conviction were, we were a pretty massive platform even back then. And if you looked at the users coming to the platform organically, we just noticed a pattern. More and more, they weren't just creative professionals, agencies and filmmakers, or consumers. We were seeing more and more small businesses and marketers coming to the platform. And the types of video content that we were seeing uploaded was getting shorter and shorter. So no longer like feature film length documentaries, and more, the video for Facebook or for your website. So we were seeing that sort of naturally happen within the platform. And then you started to talk to customers. And I remember for me, the reason I was ready to bet my career on this strategy, having not been a product or technology background, was because whenever I went to conferences like this and I talked to potential customers at the booth, what I heard over and over again was video is more engaging. It's a really powerful medium for me to connect with my customers and grow my business. But it's just really hard, and so I'm not using it. And so there was sort of this thesis that developed that, well, the same way that email and text and image is used today, video can be done the same way. And I remember another really interesting signal was in the area of live streaming. So at the time, Vimeo didn't provide a live streaming capability, but it was one of the most top requested features among our users. And we looked at a company called Livestream, a startup called Livestream that we ultimately ended up acquiring and integrating into our platform. And they were seeing a lot of the events that they were powering had previously all been for entertainment, like concerts and performing arts. And slowly they were seeing the same trend. More and more people using video to live stream meetups and smaller gatherings and events, and even things like internal gatherings like town halls. And so you're just starting to see these signals that businesses were looking to use video. It wasn't happening at scale because it was too hard, but there was a real desire. And ultimately, it was those signals that led Vimeo to double down on the strategy. And what's really interesting is for a couple of years there, the demand didn't come. I remember so many times the conversation we would have with a large company would be, hey, why don't you use video and live stream your town hall, or have your marketing team hosting all their video content? And the answer was often, of course, we definitely want to do that, but that's part of our 5-year digital transformation roadmap, right? And so it was sort of okay, we have to really convince people on the power of video. And the pandemic changed that. It changed it overnight. And suddenly, all of these companies were forced to adapt to video, and now are starting to be really intentional and proactive about how they're going to invest in and use video in the future. And so in many ways, I think we ended up having the right product and the right strategy right at sort of this moment when the market kind of accelerated. And it was always going to get there, but I think it accelerated, and I think we're seeing a permanent change in behavior that's pretty exciting.
Since taking over in 2017, you look forward, look backwards from here to then. What would you say in terms of lessons that you've learned, things that you'd like to maybe do differently?
Lots of mistakes made and lessons learned for sure, and also some things I think we did well. I'd say when you're pivoting a strategy, everyone says this, it seems obvious, but once you have conviction, you got to go all in, and you got to rip off that Band-Aid, and you got to make change fast. And I remember, I think it was about a week between when I was offered the CEO role and when I stood up in front of the company with the new vision, mission, strategy, plan. Everyone, here's your new job and area of focus. And even then, I look back and I'm like, oh, I wish we'd moved faster in so many ways. So I think once you have conviction that you need to change, just don't underestimate how hard it is, how much time it takes, and how much inertia you have to fight against. And for Vimeo, we'd been around for a long time, so there was the technology and the product, there was the brand equity of what people thought of us as, and then there was the culture and the DNA. And that's the other lesson, I would say. For anyone here who's kind of thinking about going more upmarket towards the enterprise, we didn't have a salesperson a couple of years ago. And today, it's 25% of our revenue comes from the enterprise, and it's our fastest growing area. And for any product-driven company, the DNA, you and your team have to wake up every day with deep empathy and passion for serving customers in the enterprise. And that's hard. It's hard to change that at a company at scale. And so I think that was a really, kind of important milestone for us as a company and something we had to work really hard at. And then the last thing I'll say is power of focus. If you're in software and you're in any area that's like video, opportunity is everywhere. It's an incredible privilege. It's also a dangerous distraction because there's sort of the shiny object syndrome. You can do this, and you can do this, and you can do this. And I think for us, I've definitely learned some important lessons about when you take a group of people and you give them one simple goal and you put everyone towards that goal, it is incredible what that group can accomplish. And it's really hard to do when you're navigating an industry that's competitive, where speed to market matters, and there's lots of players. So I don't know that we've perfectly nailed it, Brent, but for me now, I think that's an area I'm focused on, which is how do I create that focus for the team so that we can be truly exceptional at the things that we need to be exceptional at. And then, of course, still being open and flexible and opportunistic about the rest. And that balance is a hard one to strike. But I think for anybody running a company in software, that's the key to success.
On your recent earnings call, you said the path to success will not be a straight line, something that many founders and companies in the audience can relate with. Maybe just walk through a little bit of some of the setbacks in the last 12 to 24 months and how you managed to go through them.
Yeah, sure. The mantra that I use a lot is that we need to have patience on vision, but impatience on execution. And by that I mean, we have a vision to provide professional quality video to every business in the world, and you can't waver from that. If you're too hedgy around your vision, you will never ever, these are hard problems to solve, it's not a straight line, so you will never actually commit enough to solve them. That being said, nobody ever nails product market fit out of the gate, or if you do, you are in a rare group. And you've got to be flexible, and you have to quickly adapt on the execution with urgency when things don't go your way. And I think we've definitely seen that. A good example is when the pandemic hit, we were actually prioritizing a very different set of features and products in our roadmap because we hadn't seen the demand from the enterprise be as visceral. And overnight, it changed. And that did mean that our roadmap had to change. We had to reallocate a lot of our R&D team to different projects. The way we thought about product market fit, pricing and packaging, monetizing our capabilities versus offering things for free, all had to shift. And it was necessary, and it was good that we did it quickly. But that was hard. You set the course for a year, you all have your OKRs, you're ready to go, and then the world changes. So I think, the hard part is just figuring out where to be nimble and where to not be dogmatic versus the places to say, I'm not going to get this right out of the gate. We have to keep trying, and I'm going to fail 4 or 5 times before we really succeed. And I'll give you, in Vimeo's case, probably the classic example for us is we believe that in order to put video in the hands of every business in the world, we have to make content creation really easy and frictionless. And that means we have to take whole capabilities that we could charge for today, that other companies are charging for and building whole businesses around, and we're going to offer them for free. And we're just going to make them available, and because we want to lower the barriers and make video creation really accessible. That's a hard thing to do, right? It's a hard thing to do, especially when you're a public company and you have numbers you represent to the street, and it's a hard thing to do. But it's also that's an area where we have patience. We believe that that's going to be the right way to open up the market. And even if we don't get it perfectly right this quarter or next quarter, we're going to stay the course. So that's, those are some of the challenges and sort of things that we've been dealing with. And I'll give you one last one, which is, when you're in a period of uncertainty, a lot of times you want to be very conservative. And one of the things I did right when the pandemic hit was I stopped hiring. I did a hiring freeze because didn't know what was going to happen and wanted to be, conservative and make sure we had plenty of cash reserves. And that actually ended up being a fairly costly decision because, as anyone knows, it takes a lot of time to hire great talent. And when you stop, then your pipeline stops, and then it takes you quite a bit of time to catch up. And that was an example of, if I could go back, I would have said, wow, everyone's using video, triple down, Vimeo. And we ended up doing that eventually. And now as an independent public company, we're hiring very quickly. But those are the kinds of decisions in the moment that you make that you look back and you say, wow, when things are challenging and they're uncertain, there's a time to be conservative. There's also a time to be aggressive, and to actually say this is an opportunity that we can take advantage of.
Vimeo's business is 75% self-serve, 25% sales-driven in the enterprise. How do you manage those two entities, and how do you prioritize them effectively?
Yeah, it's a billion-dollar question. I think one of the most exciting things about Vimeo's business is that we have this freemium funnel, meaning, ultimately, we don't have to go and fish in other ponds to find our enterprise customers. They're already on the platform, and they're using the products for free. And if we do it right, that our products can actually be our marketing. It can be the way that we find and surface enterprise customers. And actually, it's already happening today. Over 70% of our new enterprise customers start as free and self-serve users, and these are Fortune 100, Fortune 500 companies. So the way that we've kind of thought about it is, and what we used to do is we had the company split between self-serve and enterprise. And turns out that's not really the optimal way to do this, because if you really want to manage one funnel, you have to think of the user journey regardless of how they pay you. You just have to think about what kind of user are you serving. And so we've actually kind of reoriented how we operate internally. We focus on the customer segment. So, companies over a certain size or large organizations. And then our product teams and our marketing teams think about how to serve that customer throughout their journey, whether they're a free user, whether they're a self-serve customer paying us a couple $100s a year, or whether we're in a conversation with our sales force at a much larger contract value. And so far, it's still early, but what I'm finding is that, or sort of thinking of it as one central funnel and one journey, so far does seem to be really helping us take advantage of this funnel. And I believe that we have, the key to the enterprise is actually in that free user base. And this is why, again, we want to provide as much value and expose as many free users to video as possible, because we believe that ultimately that's going to be the gateway to the enterprise.
Maybe just drilling in on the enterprise business. Any tips or tricks that you're finding for others to learn from how to build that up? I think it's only a few years old. So what have you learned on the enterprise side, and effectively kind of what are you finding in terms of traction and excitement on that business right now?
Lots of lessons. But some of the things I'll say that, early days, it was really, do we have the right product? And can we orient our product to really serve the enterprise? And there were a whole set of features and capabilities, SLAs, security, user level analytics, all these things that we didn't have that we had to build for the enterprise. And then it was about, okay, well, how do you sell to the enterprise? And, I think we did what every company does, which is we started with the sales team, and we built out a sales team, and who's great. And have done incredible things. But now I see how those are just very small pieces of the pie. And actually, if I could go back, one of the things I would have done is invest much earlier on in customer success, in user activation, onboarding, in expansion. Have we really thought about, once we have a customer, yeah, it's great that we've increased our contract value by selling them more advanced capabilities, but how are we actually getting them to truly succeed with video? What is their KPI that they care about ultimately, and how are we going to grow that for them? And then how are we going to expand our relationship? And that seems obvious, But I think when it comes to actually operating as a company, there's a lot of investment you have to make in those types of areas. And it's very easy to say, okay, well, the demand is here. I've got the pipeline. Let me close the pipeline. Let me hire the sales people to do that, and kind of punt a little bit on some of these other things. But ultimately, we're in software. This is all about the relationship with the customer. It's all about lifetime value. And so that's probably one of the biggest lessons, is that I would say, like, make sure you put just as much effort, attention, focus, resources on once you get a customer, making them successful, getting them to do more and naturally expand with you. I think that's ultimately what the best-in-class SaaS companies do well.
You're pretty unique with 50% of your revenue outside North America. Many companies that we cover don't have that at your size. How did you get there? What have been some of the learnings being a very global story?
The truth is, most of our international growth has been organic. Classic word of mouth. We're a global platform. The need for video is global. Workforces and teams and companies are distributed and global. And so a lot of that traction came naturally. The one area where we've really, I think, started to drive it more intentionally has been in the enterprise, where we've picked certain regions, EMEA, APAC, now we're doing it in LATAM, where we put a very small sort of skunkworks team on the ground, boots on the ground. And we start small, but we really empower that team. Typically, the sort of leader is a salesperson, but they're also, in many ways, an entrepreneur. They think like a CEO. And their job is to be on the ground and not just figure out how to sell, but do we have product market fit? What are the nuances around what these users in this region need? How do we need to go to market differently? And what we found is that by putting the right leader in each of these regions early, really early, even before you might be comfortable being like, okay, I'm ready to build a team here, putting them there early allows you to get those learnings. Empowering them allows you to quickly kind of do the things you need to do to then scale. And we've been able to scale. Our EMEA team has grown quite significantly and is now a real contributor to our revenue. And we're doing the same thing in these other regions. And so, looking back, I wish I had moved even faster in putting one or two really trusted people in these regions and seeing what happens. Because in every software and in every industry and use case is different. But what we're finding in video is the need is global, and there's not a ton of incremental investment you have to make in the product in order to get product market fit in these other regions. So I wish we had almost taken advantage of that even earlier.
One of the key things about the software industry is durability of growth, and we look at Salesforce.com still growing 20% even at the size, albeit Mr. Benioff is doing a lot of acquisitions to help that 20%. But when you think about how big this opportunity is, and just walk us through kind of your view. I know you've given Wall Street a 30% plus goal, but how do you think about this opportunity set?
I think it's, we think it's a $70 billion market, and ultimately the way I think of it is, if every business can use video, and that's going to help them get a higher click-through rate on their marketing, or sell more products, or have a more engaged and productive and informed workforce because they're able to share knowledge in a more compelling way and have that knowledge be accessible. If you can do that, then we should be able to unlock a substantial share of the software budget that exists at these companies. And not even the software budget, the marketing budget. And we have a teeny tiny sliver of that today. The average contract value for enterprise for Vimeo today is around $20,000. That's really small if you think about, imagine every marketing message you put out there has video. Imagine your sales teams reaching out to their prospects instead of on a cold email using video. Imagine every training you do is now with video instead of having to fly someone and do a one-off event, and it's all recorded and transcribed and easily accessible. You can see all these different touch points. And we've seen this with meetings. I mean, our worlds have been completely changed by video conferencing and Zoom. that's just meetings. Meetings is one part of how we communicate in business. And so every other touch point, I believe, can be video first, should be video first. And so, that's really the opportunity. And we are very early in that journey. And I will say it's not just because we have to put the products in the hands of companies and employees have to use it. The products themselves are still very early. When we look at our roadmap over the next few years, there are so many things, experiences and capabilities with video that none of us are thinking about today that are interesting. I'll give you an example. Like everyone and their mother is doing webinars now, right? Is anyone actually enjoy the webinar experience? Is anyone actually like, oh, that's really fun and engaging? Why shouldn't it be, right? We're all used to consuming, Netflix quality content at home. That's what we expect. And so there's whole areas of how we're interacting with video today that can be so much better. And so I think ultimately, like, the market is huge, but there's quite a lot of innovation left and quite a lot of building to still do to really make it amazing for people, and then to also make it so easy and simple that we all actually use it. And so I think of this market in decades, not years, not quarters, not months, not days. And we're going to take a very long-term view in how we go after it.
It's good to be out with everyone. Everyone asked kind of what this looks like post-pandemic. We were all locked in and we were consuming tons of video. We couldn't really do anything, and now we're traveling. My daughter's asking me to go to Target now. She doesn't want to buy an Amazon. What does this look like, for you guys post the end of this tough period that we've all gone through?
I never thought of video as an or. I thought of it as an and, as a complement to in-person experiences. And I'm of a belief, I don't think the world is ever going to go back to where we were. I don't think it's going to look like it has in the pandemic. I think it'll be a hybrid. And I ultimately think that video is a really great complement to that. I'll give you an example. I can't imagine, even if I have, my teams back in offices, I can't imagine hosting a town hall and saying, hey, if you weren't in today, or you were sick, or you had to go pick your kid up from school, you're going to miss it. In what world are we going to ever sort of settle for that? No, it's going to be live streamed, and it's going to be recorded, and it's going to be transcribed, and I should be able to go back, and anyone in my team should be able to go check, oh, I think there was a date that was shared about the next, big social event. Let me search for it, and it should pop up exactly that moment in the video. I mean, these are things that just human behavior has changed, and so that's not going to change. I think about, again, the training as a use case we're seeing so much of recently. But you have companies who literally used to have to fly all these people out to meet with each store to train them on the new product line. And that was expensive. And then if you missed the meeting again, like you didn't get the training, and then you have to come back, and then you have to go do it again every quarter. The idea of doing that in video and then having it live on forever, it's more effective. It saves you money. It helps you achieve your business goals. So I think ultimately there's plenty of ways that video is going to increase the KPIs that businesses care about to be successful. And in all of those ways, it will endure. It will not go away. It won't be a fad. And I mean, anyone who has like a teenager right now is seeing how video is being used in our personal lives, and it's taking over. And it just doesn't make sense that it's not going to permeate in our professional lives as well. We don't live in worlds that are totally compartmentalized. So that's the bet.
Last question. The next 5 to 10 years for Vimeo. Give us the 40,000-foot landscape of what you see from the cockpit.
Yeah. Well, I think if platforms like Vimeo do our jobs, and we create products and tools that make professional quality video far easier for every employee, I think the future is you have 1 billion knowledge workers in the world, 1 billion plus knowledge workers in the world. Every single one of them is able to create video content to communicate with their customers and with their colleagues. They're able to do it on their phones, on their desktops. AI will be used to dramatically kind of ease the production process. It will exist for recorded video as well as live content. And then I think what's really exciting is all of that content gets really sort of used, and instead of being fleeting, it becomes permanent within a company as like a system of record that, we launched a video library product so that all of your video content can be shared in one place. And I just think what that can ultimately do for businesses is help you be more productive, help you, diversify your workforce. You can hire many different kinds of people. You don't have to be sort of constrained by time zones and place. And I think it's going to open up like a whole different way to work better. So that's, I think, ultimately the hope is that every employee in the world's a content creator, and every single one of us is able to work more productively because we're able to harness the power of this medium and this technology. And I think Vimeo is super committed to being there and to driving that. But I also think there are others in the space who are innovating. And when you're early in a market, innovation and competition is good, right? It's good. It forces you to be disciplined. It forces you to provide more value to the users. And so I think it's a really early, exciting time for the industry. And I'm very excited to play a role in it.
Thanks, Anjali, for joining. Thanks, everyone, for being part of the session.
Cool. Thanks.
Thanks, guys. It's awesome having a live band. I haven't seen that before. So welcome, everybody. My name is Alex Rosemblat. I'm the CMO at Datadog. And Datadog, for those that don't know, is a monitoring and security company for modern IT infrastructure, usually cloud infrastructure, but we'll take anything that's complex. I've been at Datadog for 8.5 years now. At Datadog, I was the first go-to-market employee. So it was a bunch of engineers when I joined. I'm actually a former engineer, so that helped in understanding their language. But there was no marketing. There was no dedicated sales when I started. We started from scratch, and it was a blank slate. And something that we very quickly found out was that building a marketing channel takes a lot of work, and that it's something that really needs to be done slowly, steadily, methodically in order to be achieved well. And once you figure out a channel, then all of a sudden you can scale, and scaling becomes a lot easier. So on this, a good way to think about everything having to do with marketing channels is that it's a lot like a product. And maybe some of you have built product. I'm sure that many of you have interacted with product teams. Something that I think is emblematic of working with a product team is it's never done. I mean, it takes you forever to get to V1. And finally, when you get to that first version, what's the next incremental version? 1.1, then 1.2. Then sometimes you get 1.2.1. And it just never seems to be ready to get to that version 2 or version 3. That's a more mature, more stable, more robust product, which is, at least for a milestone, what everybody had intended to get to. And I don't think that a marketing channel is any different. It takes a lot of iteration, a lot of cycles, and a whole ton of feedback to get the marketing channel right so you can figure out everything that you need to do to scale and hit a ceiling. Now, a difficulty with building out marketing channels, especially in the amount of time that's needed, is that the feedback can't come from a peer or from a very small group of customers. It's got to come from random people that could be prospective customers out in the market. And it takes a very, very long time for some kinds of campaigns for them to take a look and then vote with their feet, vote with their mouse clicks, vote with their eyeballs to go forward and check you out more, or to say, not really interested or doesn't really fit my need. So you need tons of those cycles and the tweaks that you make from the feedback that you get to try to get everything right, to build a marketing channel like a product to the point where you can scale it out and hit a ceiling. Now, if you're a marketing leader here in the room, or you're working with a marketing leader, where things get a little bit tricky to get this singular focus is that the expectations that people have of marketing are huge. From PR to advertising, analyst relations, blogs, SEO, the list of things that everybody thinks marketing is going to do is quite expansive. And management thinks that marketing is going to do one thing, sales thinks that marketing is going to do another thing, product something different, even down to an individual employee that wants to show the website off to their friends and family for the company that they're working at, and they've got expectations of what you're going to be doing with that website as well. So with all of these expectations and everything that everybody thinks that marketing should be doing, I think that a key issue with a lot of marketing leaders or marketers inside of companies is that they very, very quickly get spread thin. They're doing a pinch of blogging. They're doing a pinch of analyst relations, a pinch of press outreach, a little bit of product marketing here and there. And when they're doing a little bit of everything, it becomes nearly impossible to become amazing at one single thing. Oops. So amazing that you want, sorry, can you go back a slide? Thank you. So amazing that you figure out what it takes to basically throw the kitchen sink at a marketing channel to hit the ceiling that might be there. A key question to ask here while people are doing a little bit of this, a little bit of that is any of this work actually turning into revenue? Because at the end of the day, the marketing function is very distinct. The marketer is trying to reach random people that could be prospective customers, floating out in the market, trying to engage them, bringing back to some property of the company, whether it's a physical trade show booth like the ones that we have right out here, or a landing page, a blog, something to show engagement, something to be brought in. And when you take a look, many of the activities that marketers oftentimes get sucked into or think are part of their scope don't really contribute to the bottom line. A lot of them are supporting activities that are there to make smoother those revenue-generating activities. And at certain stages of growth, if you don't do much with them, they're pretty much not going to contribute to revenue. I think a really good example here, and of course, for some companies it might be very important, but something like PR, press relations. You can do a super good job. You can come up with a great press release, get customer quotes, get customers to speak on your behalf to a reporter, engage a reporter, have your briefing with them. And then some news for a third-party company, maybe Apple, maybe Google, comes out at the exact same time that you had set your pitch out, and the writer says, oh, that's not as important as this other news, writes that up, and all this work that you did literally goes for nothing. And that was time that could have been better spent, definitely focusing on something that would bring in new customers and new revenue to the company. Again, if that is the goal for that company for marketing, which I think for most companies it is. So what we have found in 8.5 years at Datadog is that moving slowly, moving steadily, moving methodically, moving with a lot of introspection, taking a look at the data for a pilot experiment is the way to scale marketing. And the thing is that, similar to the hair, once you start to get these little insights, you found a little trick that works here, a little trick that works there, and then you start to use them all together, at some point you start to make these huge leaps because you figure out what works for a marketing channel, and before you know it, you're at a point where you can't grow that channel anymore because you have hit the ceiling. There are no other people available in the market that could see this particular ad or trade show booth or whatever it is to bring into your company property, and then it's time to turn around and to start focusing on the next channel. So, this all sounds good, and we talked about how marketing means a lot of things to a lot of people, and people are getting pulled in a bunch of different directions. In order to be able to really hunker down and do one thing and become amazing at it, it's important to first narrow your focus and then set goals realistically. So from what I have seen, an individual or a team, and here I'm defining a team as a set of people, it might be employees, it might be some employees plus contractors plus outside agencies, can only really become fully dedicated in one thing at a time. That means that they're going to become experts at that one thing. If you work backwards from there, that means that you have to pick one marketing channel at a time for that team, and likely only one single campaign or one single type of campaign, and that's all you get. If you're going to become amazing and really understand the ins and outs of this one individual channel, you can only focus on one major thing at a time, until you should set some sort of criteria where you hit a milestone that you know that you have gained enough mastery in this particular kind of campaign or marketing channel that you're good, and then you can shift your focus to keeping that motion going and moving over to do another thing and start from the beginning again. One thing, one campaign, one team, singular focus, and working on that particular goal. At Datadog, the first thing that we did, that one thing, was sponsor trade shows, booths, just like the ones that we have outside of here. I was lucky, again, I mentioned I was the first go-to-market employee. When I joined, there was a calendar of events that fit our target demographic that were coming up. So that was the one thing that we did. And just getting really good at doing trade shows in a small company took literally everything that we had, and we really didn't focus on anything else for about 1.5 years. But 18 months later, we were amazing at trade shows. We had written down a playbook. We could pass it off to somebody else to keep that going, and we turned around and started focusing on the next thing. This also means, because you're going to be singularly focused, that you have to explicitly declare the things that you're not going to be doing. Now, this is going to probably run afoul of a lot of expectations of other people at the company that expect marketing to be doing one thing. And realistically, there's going to be website changes that need to be made. There's going to be the occasional blog and press release that needs to be released because the product team came up with something new. But if you're able to say, we're not going to go heavy on press relations. We're not going to go heavy on analyst relations. We're not going to go heavy on content. We're not going to go heavy on advertising. Whatever it's going to be, if you explicitly state you're not going to be doing these things, it becomes common knowledge that this is not a thing that the marketing team is working on at that exact moment. And very importantly, it's going to be at first quality versus quantity. Anyone here that's run like a Twitter campaign or a Google AdWords campaign, it's super easy if you set things pretty broadly to be flooded with attention, clicks, leads, what have you. You get a ton of them if you want. but are those the people that you really want? Are they really your target demographic? And that's where negative keywords and geolocation or geo restrictions start to come into effect. You want to hit that quality level and get a vein of exactly the kind of people that you want to reach out to before you start plowing tons of time, money, and effort into scaling a channel. Now, as I mentioned before, product, sales, other people at the company are going to have a lot of expectations. But the people that you have to get on your side are the management team and oftentimes the board of the company. So the management team is going to be expecting a certain amount of things to happen from a marketing function concurrently. Declaring your scope and that it's going to be super limited, aside from just keeping the lights on in other areas, I think is hugely helpful. Sorry, can you go back a slide? Is important to making sure that management buys in and then also advocates on behalf of the board. An important way to get this message across is to establish the hard data that you're going to need to evaluate whether you're hitting your goals. And in this case, if you can align the goals to the main business objective or the ultimate goal of the company, that usually goes a long way to supporting a singular focus on one marketing channel, because the trade-off that you're making from not doing many things to doing one is that you're going to increase the reliability that you're going to hit that goal. If you need 500 customers by the end of the year, and that's going to translate back to X thousand leads, you're going to more reliably be able to hit those X thousand leads by doing one thing and becoming great at it, rather than by spreading your bets and doing a lot of things maybe halfway. Which goes back to data collection and instrumentation. If anybody here is currently engaged in marketing and you don't feel like you have good data to work with, that should probably be the first thing to focus on so that you're able to get a data-driven case made to the management and board of your company to say, we're going to do this one thing in isolation until we become great at it. A note on marketing data, especially if anybody here in the room is working with marketing people, is that it's oftentimes imprecise. I've had the experience where you have multiple systems all trying to instrument the same metric, and one gives you the number 10, the other gives you the number 13, and one gives you the number 22. They have different definitions of what the right metric is, of how they're collecting that metric, and while individual data points or individual data sources might be imprecise, the important thing is that they should be directionally correct. So if one data source goes from 10 to 40 or 10 to 200, you know for a fact that marketing channel is growing, and that even though the exact number might not be right, the direction and the scale of the direction for that specific data source should be something that you can trust more, and you know whether things are going in the right direction. Ultimately, also, if you know what the case is that needs to be made back to the board and management of a company, you can work backwards to figure out the exact pieces of data that need to be collected, and again, with a laser focus, do a good job of instrumenting those few pieces of data to support the case that you're making about whether the marketing channel that you're scaling is indeed going in the right direction. So to get to all this, this is, I think, pretty theoretical. You're going to only be able to really focus on one thing at a time, so you want to make sure that you focus on the right thing to spend all that time on. And the way that we've done this at Datadog is that we work on hypothesis-driven approaches to different campaigns that we're going to invest in. Or even, if it's a small monetary investment, it's going to be a very large investment of a scarce amount of hours from the team that needs to get all the pieces together to make a test work. So if someone's got an idea for a campaign, fantastic. Has the thought been put on paper of how this campaign is going to work? Specifically, what's the mechanism? What's going to be the time limit to assess success? Are there budget limits? Do you have enough expertise on the team or from the vendor to make this campaign work as designed? And importantly, what is the minimum result? And I think that's a really important concept. The minimum result that you need to see to know that this specific pilot or this specific test is actually working the way that it has to. And if it falls short of that minimum result, the thing might not be, sorry, can you go back a slide? The thing might not be working at all. And you might want to actually cut bait quickly and move on to another idea that's more likely to work out and become a beachhead for you as a company to start investing in and growing a marketing channel. Importantly, if you're working with an external team or an external vendor, you really want to make sure that they're going to be the right people to take this forward. And I can tell tons of stories of sketchy vendors that have done weird stuff that you were never expecting, and you have to ask them to pull back really quick. And two other, I think, really important points are, once you put everything on paper and you're feeling good about it, it's very easy to become blinded to any weak points or any holes in your plan. Finding a peer that knows marketing to play devil's advocate and try to point out holes in your hypothesis is super helpful. And then lastly, and extremely importantly, have you instrumented the data to make the assessment of the campaign success accurately? Do you know that you're getting the right leads collected from this source, if it's a lead generation campaign, that you will be able to very cleanly attribute back to that campaign to be very confident that this thing did indeed work? And once you have this chart has probably been the methodology that's gotten us to very, very scaled out areas in a lot of campaigns to the point where we've hit tons of ceilings and we can't expend any more time, money, or effort to grow that particular campaign anymore at Datadog. The number one thing is the pilot. Now, a lot of vendors usually have a minimum amount that they want you to spend. Oftentimes, those minimums are negotiable, especially if you're talking to them in the last, sorry, can you go back? In the last couple of weeks before, can you go back to the previous slide? Thank you. If you're going back to the vendor, working with them the last couple of weeks before a quarter will usually get you the discount to the minimal amount of spend or the minimal amount of time that you need to run something in order to assess whether it's working or not. And I think that that's another big concept. Time is scarce. Budget is scarce. You want to have the minimum amount that you need in order to see whether something is good and warrants more investment or whether you should get rid of it. Once the pilot proves out, you want to usually repeat and enlarge that pilot, make sure that there wasn't some sort of seasonal fluke or that you just didn't get lucky. And this might actually be repeated a couple of times over. And once you're feeling comfortable about the mechanism and the campaign type, then is usually a time that you start to spend real money. And in the case that this is an organic campaign and you're not spending money, that money is probably people's time instead. I usually call that getting a campaign to production level. And if the campaign is going great, that's where you're going to want to start to find the ceiling. If you've already proven everything out, you understand the dynamics of the campaign has become predictable and repeatable, don't be afraid to go big. Go crazy big. Go ludicrously big. There should be no fear in this once you feel that you really gutturally understand how a campaign is working. An example from Datadog that we have is the biggest show in our industry is AWS, Amazon Web Services, reInvent. That show is actually coming up in, I think, about 2 months, right after Thanksgiving. They're going to be doing it in person. We're going, once again, as big as we possibly can go. And since the first time that we attended, we've been the top, sorry, can you go back? We've been the top sponsor. Can you go back a slide, please? We've been the top sponsor. And for a long time, there was usually 4 top sponsors at reInvent. One was Intel, big Fortune 5 company. One was Accenture, another one was Deloitte, really, really big consulting companies that have been around forever. No surprise there. And then there was a purple dog that nobody knew for years when we were a small startup. And we not only were getting the biggest spot, which was super intensive on the budget, but we had to man this ginormous booth space that we've been given. And we would fly out literally for the first years, the entire company, and then portions of the company. And that translated to literally hundreds of people that we were flying out, putting up in Las Vegas for a week, and having them do all sorts of different tasks. But the thing was that reInvent is the best campaign that we run. In every metric that we assess, it's actually our most efficient. We have access to the biggest customers that we end up bringing on board. And we power an entire year. Sometimes there are deals that are still about to be closed by the time that the next reInvent rolls around that we've been working on because they're so large for the entire year since we met them at the trade show. So for a long time, people would say, like, oh, Datadog, what's up with you guys? You guys are bringing hundreds of people. There's purple shirts everywhere. You guys are crazy. Well, that's where we found our biggest customers, and it's the best show. And if there were multiple reInvents at the same investment of people, money, and time, I would love nothing better but to be able to invest over and over and over again, because once we figured out how that show worked, that's become our best campaign. A couple of words here on hiring. Once a campaign starts to feel like it's old hat, it's time to pass it on. Once you hit that ceiling or maybe even before you hit the ceiling, you understand how this campaign type works or this channel works. Time to pass it off, write up the playbook. Writing a playbook, I think, is a really good exercise also, because when you start putting things on paper for somebody completely random to have to pick up and run with, you start to realize all of the gaps, all the holes, all the things that weren't actually fully thought out that you should put a little bit more time investment into to figure out before you're going to get somebody completely net new to try to do this thing as well as you've been doing it for months or maybe even years. Hiring a specialist is, of course, always preferable, someone that's going to bring back a background and experience in that particular area to grow things faster or do things in a different direction, different from what you had thought to do. But sometimes an eager beaver, someone a bit more junior in their career that has a lot of enthusiasm and a lot of energy is a good match also. And just the sheer sweat equity can bring in a lot of new opportunities and new things that you wouldn't have thought to do and keeps on growing that program. Hiring an experienced leader is definitely a good shortcut for that learning curve. Someone can bring in a bag of tricks or a lot of experience of how this specific channel works that they can work on before, or that have worked out for them before, and you are able to take control of that channel faster. And I think a good rule of thumb is if you get to a point where you have 2 full-time employees working on that one campaign or that one campaign type, and especially if they're raising their hand and saying, I'm turning down good opportunities because I just don't have enough hours in the day to work on them, that's usually the time to bring in a leader to grow that market out or that marketing team out further and to try to take that team to grow explosively to keep on finding the ceiling, and once they get there, maybe even broadening the scope of what they're working on to get more market opportunities. Because at the end of the day, as companies, we're all out here for world domination. We want to become the next Salesforce.com. And the way to do that is to fully excavate a marketing channel up until you find the ceiling. So my last slide here, what happens when you've hit the promised land? You've scaled out a marketing channel. Your function, that pilot campaign from a couple months ago, or maybe a couple of years ago, is like just a pebble of what you're usually doing on an average day in terms of getting this big boulder pushed up the hill. I think one thing in particular is you can always do better. And I think that many people have heard the quote from Michael Jordan where he kept track of how many baskets he'd missed. Sorry, can you go backwards? And you can always optimize. You can always find new opportunities. You can always keep on doing better. One important thing to note is, I think that early on I thought, hey, once I get Google AdWords working great and I've got a great, baseline, I can just take the day off. It'll be fine, no problem. But the thing is that everything around your campaigns is in constant flux. There's changes in platforms. There's changes and shifts in the market. There's changes in personas, and what a person wanted last year is different from what they're going to want this year. Competitors are going to come in. Other products that support your ecosystem are going to come in. An edge is always going to erode. So once you've got your campaign set up great, you have to keep on taking a look at it, seeing what's going on, evaluating the numbers at a very fine scale to make sure that your edge is staying as sharp as it was when you declared this thing. Sorry, can you go back? I don't know who's got the trigger finger. It's not me. So the edge is going to erode, and you want to keep sharp. At certain inflection points, I think that this is for somebody that is getting to new levels of scale that they haven't worked on for that particular channel before, you're going to have to take apart your whole campaign because things are not going to work as effectively or potentially at all anymore. Running a Google AdWords campaign that spends low thousands a month is different from a Google AdWords campaign that's spending millions a month, for instance. Having a 5x5 or a 10x10 booth is completely different from running a 30x30 monster, maybe even a double-decker booth with an upstairs where you're running meeting rooms. And when you take it apart, you're going to potentially need new systems, new kinds of employees, new ways, a new playbook potentially, and then you're going to have to put things back together to be functioning as effectively at that larger scale as you were at the smaller scale. And I think a very important note here, especially I'm sure a lot of people here are in companies that are growing very quickly, and just like me, you're looking out into the market. Hiring is getting tough, but once you're able to find your right hire, it's exciting. You want to bring them in as quickly as possible. You're being told by your boards and by your management, grow, grow, grow. I think that team member number 10, and this is why this is the last thing I'm going to talk about and put it in red, is I think the flashing light for scaling a team where you need to maybe take a step back, slow down for a little bit, and similarly, look at the team, analyze it, potentially take it apart and put it back together again. I have found that 10th hire on a team is 2 or 3 hires away from getting to an inflection point where there's too many people, coordinating, communicating becomes really difficult, and even though you've added way more people, the team is actually producing less because they haven't been built for scale. So I think that team member number 10 is the moment to stop. Document everything. Identify points that are ambiguous where you have to either document them very thoroughly, or you need to roll out a small training program for that team. Instituting regular check-in meetings, potentially coming in with more tooling so everybody can know what everybody else is working on. That's really the moment where if you're able to do that for people, you're going to be able to keep on scaling. Because the thing is that for campaigns, they're relatively easy. I mean, not easy, but they're straightforward is probably a better word, to peel back the onion, see what's going on, retool. Maybe there's a very tailor-made solution that you plug in that system and the thing starts working well at scale again. But people are a little bit more challenging. And to get them all working together can be more challenging. So that's why I definitely want to highlight that that's probably the moment where you want to stop and retool and make sure that you're built for scale. And building a team for more than 10 people, you're actually really building a team for 30 to 40 at that moment. And that's where you want to be thinking of. Because you also want to be able to add people, if you have found success, at a large clip to where you quickly get to 30 or 40. So with that, all right, now I do want to move to the next slide. Thank you, everybody. Hopefully, you've been able to glean some kind of insight or something to help you scale. And again, I think that the most important thing is to scale. With so many distractions, with so many things that marketing is being asked to do, if you don't get to that singular focus and you don't focus on that one thing, get the stats good, evaluate the stats, keep on doing repeated pilots, repeated enlargements of the campaign until you get to that scale and you try to find the ceiling, it's very difficult to get the subject matter expertise in that one channel to be able to hit that ceiling and get to the point where you can't do anymore. So with that, hopefully I'm able to help some of you guys hit that ceiling, and thank you very much.
good. Is this the right? Oh, the right.
I'm going to do 8 feet.
You know they made 6 feet up. There's no science for it, right?
What's the number?
It was supposed to be 10.
Yeah.
And I guess whoever it was, the CDC or Trump, has said 10. No one will do anything. Like they won't comply.
So then they were just like 6
we're
is
just gonna
fine.
we're gonna make it up 6, right?
You have to assume there's some relationship between distance and.
No, there is. It's
Okay.
it's like a pricing point.
Yeah.
Like who made up Box's pricing? You?
Half the time, but not anymore. We actually do real analysis, so I'm hoping the same goes for the CDC. But I guess the answer is no. So.
Well, everybody, let's welcome back Aaron Levie, who maybe not intentionally has had a great journey with SaaStr. Aaron was the first speaker at the 2015 annual, 1 week after the Box IPO. You may not remember, but I remember.
Okay.
Right? Yeah, you were tired.
I'm always tired, so
Tired.
that makes sense, yeah.
And I remember, you won't remember, but the
I don't think I was like COVID tired, though. Like, this is like, pandemic tired is a whole different stage.
I think it was tired of talking to 100 analysts, of whom 3 understood what recurring revenue was, right?
Yeah, that makes sense, yep. And NRR and all of these crazy metrics.
So we'll fast forward to today. The title, can you see it? Maybe down on the screen here. Can you see everyone down? We were asked to talk about behind scalable products, so we'll at least come close. I do want to talk about multiple products. At first, what I wanted to do is I grabbed just a few slides from Box's public company stuff and our 5 interesting learning series. So maybe just to ground, everyone knows what Box is, but not everyone might know your metrics or where you are today. That's possible, right?
Yeah.
Yes. So we're coming up on that $1 billion in revenue we talked about on TechCrunch a few years ago, right?
Yep. So FY21 is last year for us. So we'll do about 855, 60 million in revenue. I forget the last guidance range, but in that kind of rough scale.
Yeah. And if you had, and we'll get into it, but if you had to summarize how Box is different on the other side of $1 billion, what is that other side of $1 billion?
I think actually it is, it's so cliche because we all, like everybody here, and we wanted to always build a platform, but like that literally is the answer. You have to build a platform. But I think the way you build a platform that now is hopefully doctrine at this point is you build it through initial use cases that actually find your product market fit. And then you're able to evolve those use cases till you have a full comprehensive platform. And so that was kind of our journey. Like we started as probably nobody remembers like USB drives and FTP accounts and just
Anyone remember?
Maybe a couple people, like back in like 2005, we were on Blackberries and you're on Internet Explorer and you had USB thumb drives. And so we were just like, let's build a better way to share files and access data from anywhere. We started Box to have that vision. We did not know the word platform. There was no sort of conceptualization of what that would mean and that element of the vision. But literally within about a year, people started saying, hey, can we integrate Box into other applications? And they were like, okay, well, we'll create APIs. So then we had APIs. And then eventually customers came and said, hey, we need advanced data governance functionality. And so we said, okay, we'll build a governance module. And then eventually we stopped getting sort of like totally pulled into these reactively. We decided that was actually going to be the strategy. So we would build out a multi-product suite and then eventually a full platform approach to go and address these use cases of how companies manage all of their content. And so I think at the other side of $1 billion, Box looks much more like a platform and a suite of multiple sort of categories of products, all built on one architecture that can hopefully get procured by the customer in one simple package, and then they deploy us across their organization. And that's kind of the journey we've been on. So it was one product that was very more. I think most people would have just said, hey, we're a feature. And actually, we saw that as a badge of honor initially because end users don't want to buy platforms, they want to buy features. And so we got in through the feature, and then we were able to ultimately turn that into a platform, and that kind of brings us to today.
Well, it is interesting. Everyone needs a wedge, a 10x feature, right? And so that trite-ism of a feature versus solution is pretty stupid if you've been out in the field, isn't it?
It is because your especially incumbent competition is always trying to deposition you as a feature, and but what they don't realize is hopefully what you're building behind the scenes. And I think the thing that I look back on is as maybe one of the biggest lessons of that journey is architecture matters more than almost anything else you can imagine in that journey. Because if your feature is then completely disconnected to the next feature, and then thus the next feature, then you really aren't on your way to building a platform. And so we made a bunch of, now in retrospect, kind of lucky, fortuitous decisions in our platform architecture that were not intentional. We just lucked out that we made them the right way, and then eventually they started to become much more intentional because we knew that we were building a platform. But one of those small things that you really, actually, it's worth paying attention to, even when you're just 3 people in a garage.
Well, that's interesting. I hadn't thought about talking about that. One reason I think, and you tweet a lot about this, one reason I think startups can always beat folks that come behind them is their platforms are always at least 10 years old.
Yep.
I mean, by the time, even with the pace we grow today, everything that you might want, and so there's always a place where that architecture or solution is just almost too dated that they're not even going to bother, right? And Box originally is, we're at whatever we want to call it, SaaS 2.0.
We're in Web 3 right now.
But
yeah.
We started so early. What was something that you actually got right that you're talking about? Because it was so easy to get things wrong in the early days from scalability. What's an example of what you're referring to?
There's a litany of things. So first of all, now again, it's kind of ridiculous to even talk about this now, but just we were multi-tenant from day one, and we made no exceptions to that. So when customers said, "Hey, can I go run this inside my data center?" we said, "No, you can't," and we lost. I could probably add up maybe $100 million in revenue.
I would bet
easily.
Maybe even today still, right?
Yeah, absolutely. I mean, there's governments globally that we're not serving because of that requirement. But you can imagine when you only have like 15 sales reps and 3 of them are losing major deals because you're not on-prem. That's very painful, and like that becomes a major topic of challenge for the business. So we basically rejected all forms of any modification to the software, any chance of having sort of fragmented architecture. It was a sort of, the Henry Ford, you can have any color as long as it's black. We have one piece of software, and it's going to be in our cloud, and this is how you're going to deploy it. And we had a lot of people say, well, that's not how SharePoint works, or Documentum works, or some of our kind of incumbent competition. And that point of view and principled approach meant that we filtered down to the customers that actually wanted exactly what we had. We could learn from them instead of being fractured in what we were doing, and that just continues to compound over time. So one multi-tenant architecture, all on the same data model, which ended up being another sort of important aspect of the business, which is, and this is just esoteric and inside baseball for what we do, which is you store one asset once, and then you can do anything against that single asset, as opposed to, again, there's lots of different places where your files might be and where your content might go. So that single data model, single multi-tenant architecture was really important. And then, because that was all abstracted from infrastructure, this was the key point. We never sustainably fell behind from what you could actually do with computing and with software. Because even though we started in our own data centers, because believe it or not, we literally launched the company before AWS existed. So we started in our own data centers, and then we got to leverage the public cloud, and then we did even more in our data centers, but then now we're doing even more in the public cloud, all the while customers never had to do a single thing or even worry about it once. So that's all happening in a way that's fully abstracted from the customer, and now at this point we're moving even more into the public cloud, leveraging every possible available service. And again, the magic is your customer is just going to get all of those tailwinds benefiting their deployment. And so I'm very religious. I probably only have one religion, and it's anti-on-prem. You have to be cloud, and it's because of this velocity of innovation that you get by being able to have a single architecture.
Have you? That makes complete sense to me. Given where the world has gone, no temptation to do anything that's hybrid cloud or hybrid something. Even now, you have the scale. You're coming up on $1 billion, right? Yeah. You could probably put together a team now. There's just so much money. If you're willing to do it, the money's more than ever, isn't it?
There is, and
right? You can get a $100 million contract if you're willing to do some of these hybrid offerings.
There is, and clearly, there's absolutely a way now at this point to not deal with the baggage that we had 15 years ago, where if you deploy something on-prem, almost instantaneously you're on a wrong version, and we can solve that.
Out of date forever.
Yeah, so we can now solve that. I would still posit, if you really just think about it in practice, though, think about, every time that Amazon or Azure or others have launched these sort of on-prem versions of their clouds, these are all relatively subscale versus just the pure public cloud infrastructure benefits that customers are getting. So we're still staying the course on our strategy. I guess never say never, but in this case we're big believers.
One just follow-up question, then I want to make sure we have time for product, but I guess it is related. Platform, right? And I think one of the things that we've learned over time is as you approach 100 million, right, which is now an order of magnitude less than where you're going to be, you want to start being multi-product potentially, which we'll talk about in a minute, and you want to start being a platform for others. And Box was early, but it's interesting that your vision, it's still evolving now for this platform, right? Are there one or two things, and we'll actually look at the platform on the next slide, and maybe I'll flip to it, except I can't go back, so I'm cautious. But are there one or two things you wish you'd done earlier on your platform, looking back, that you would have pulled them done earlier?
Yeah, I think there was. I mean, I just say as a general statement, every feature that today is or product that today is performing well, I wish I had done earlier. So there's like unlimited.
That's a given, right?
Yeah. So like I wish I could do a lot of that faster. Sometimes you have to find your way of which products are working, and I'd say every maybe year, we have 2 or 3 bets going on in the business of new areas of innovation. And some years, all of them work. Some years you look back and you say, okay, only one of those worked, or maybe we even skipped a year of actually kind of that type of value that we want to drive. But in general, you're always sort of planting a few seeds, and then while you're working and incubating the ones that you planted the prior year. And so today, data security is a big area. Workflow automation is a big area. We're now, thanks to your inventions, we're now doing a lot more in e-signature. So we appreciate all the wars that you had to fight before us on that front. But so we're going to have multiple pillars of new capabilities all on one platform, and then integrated together, and then offered as APIs to anybody else that wants to build on Box as well. So that's kind of the vision. But I wish I did all of the stuff that's working sooner.
Yep. And how much of your time now as CEO do you get to spend on these 2 to 3 big bets? How much of your 60 hours a week, how is it split up at scale?
Certainly when we're not in a proxy contest, I can spend more of my time.
I wasn't even going to bring that up, but congratulations.
Yeah.
I think you beat that by a higher margin than anyone in all time, right?
All right. About 7 people were paying attention to that, so thank you for your vote of confidence.
I was there. I mean, literally, I think you beat the contest by more than like anybody else of any proxy contest.
We're happy about the win,
right?
Yeah. So, ultimately, the proxy contest is we just believe shareholders agreeing with our strategy. So it's sort of not even that much more maybe celebratory than that. But ultimately, I spend as much time as I can on our new bets. But as, again, everybody here knows, you got to equally balance that with customers and investors and other dynamics that we all face as founders.
What about today, customers versus prospects? How much do they trick the CEO into spending his time with each of the two? How do you balance the two?
It's actually more that, I trick myself into it. So I am willing to talk to anybody remotely interested in moving their content to the cloud. So I like, 90% of the time I'll leave some Zoom call with a prospect and be like, that deal's going to close next week. We got this. And it's like a year and a half later. It's like, okay, finally we're closing it. So there's a sort of optimism that refreshes on a daily basis as a founder. But so a lot of time spent with customers. But we've definitely shifted. So we have 100,000 companies on the platform. So that means almost by definition, the vast majority of our bookings and revenue are going to be from our existing install base.
That's why I asked the question. The majority of your new revenue will hit it. Is from the base. So as CEO, do you align your time with that, or do you not align your time with that?
You align your time with where ultimately the dollars are going to come from. And so in the base, we often will have lots of customers that have significant expansion opportunity, and that can look as important or be as important as a net new logo that we have to go get.
Yeah. So we'll get to that in a minute. One just niche question when I say this, just curious. So 96% subscription revenue. As you go more solution and even more enterprise, have you thought about pushing that number lower, of doing more services for these big deals?
It's actually crazy. I've been trying to push that number lower for years.
Lower?
I can't. And the reason I can't is because there is this sort of dichotomy where the simpler the software is and the easier you make it to implement, that recurring side is going to be higher. and so there's this inherent tension, which is hopefully if we're building good software for our customers, that the amount of extra services they need should be less, and the more you become a platform, probably the more that system integrators and other partners
will do it for you.
Those. So I actually think it'll probably remain this, even though we do become more solution oriented. It's because we'll have a bigger partner ecosystem. We still want to build very simple software that's easy to implement, but I think there's no magic number. There's plenty of amazing SaaS companies that have 15% of their revenue as consulting revenue, and those companies are doing unbelievably well. So
yeah, I mean, even though Qualtrics is 20% services, you probably could do it if you wanted to, right? But
I've tried tried to get it to like 8, and I can't. So
yeah.
So I think every company finds their natural spot for their product, for the market that they're in. Maybe maybe the number will get higher over time, but I'd say right now, if I were talking to an investor, I would say it's expected to hover around this range.
Cool. We could spend all our time on this slide. Let me make sure. Just a quickie, and I don't want to spend all of our time on the future of work that we talked about, right? But while we have you, this chart you have on NRR is interesting, right? So there was a little bit of a deceleration during the global pandemic, and we're back. So I think we know that. Firing on all cylinders. What, maybe more tactically or specifically, what's coming next in the next 2 years, right? Beyond the world being pulled ahead 2 years and e-signatures, the light going off, but what really is going to be different in the next 2 years?
Well, I think generally for everybody in this room and beyond, what's going to be different is that every company is going to be a hybrid work organization, and even for the most sort of ardent fans of offices, every IT organization on the planet is going to have to implement hybrid work. So you've got basically the singular largest mega trend in enterprise software history is playing out right now. And
is it early? Is it just starting really?
It is, because if you literally look at people's vendor stack, and if you were to go interview any CIO of any top 10,000 enterprise, the majority of their dollars are going into brand names that existed a decade ago. So that kind of tells you we're still pretty early, because it can't possibly be the case that for all of the world's largest organizations, all the software that they're using is still the same software as 10 years ago when we didn't have hybrid work as the main fixture of how we operate. So something still is yet to completely go and actually change and make these markets continue to evolve. So you got hybrid work. Everybody knows everything's going to go digital. There's literally not going to be anything other than a digital transaction. So think about all the software that's to get written to go and help every company in every industry and every size organization all around the world be able to process everything digitally. We're still in the very early innings of that. And then you've got the mega tailwind and just tectonic shift of security, privacy, global data privacy challenges that every organization is facing. So you compound those three things, and there just have never been more tailwinds in enterprise software than right now for this type of transformation. When you and I were in the early days, at best, we were like iPhone 3 and AWS were like the tailwinds, and that was it. That was the disruption. And today you have entire ways that we're shifting all of society and how we work, plus every possible technology tailwind that you could imagine. So that's the macro view for everybody. And then for us, what we think the biggest impact for our business is that just means there's going to be a wider generation of unstructured content and data. Every interaction that you do with a client, a partner, a supplier, there's going to be some amount of data and content that you're going to work with. Financial data, contracts, invoices, marketing assets, media, research data, knowledge, management. All of that has to be stored somewhere, managed, workflows around it, and then integrated across applications. So that's what we're going to do.
Yeah. So one interesting thing I want to follow up on, because maybe it's obvious, but I hadn't thought about it till you brought it up, is what's going to happen in the CIO's office, not now, but in the next couple of years? Because when COVID hit, there were certain categories. Zoom's the most obvious, but it's not just Zoom, right? It's call center, right? I mean, good God, that space exploded. E-signatures that we didn't quite get. And that happened because it had to happen, right? Yep. But now you're talking to CIOs, and they've got 10-year-old software that they're going to replace because of these changes, but it's not all happening this week, right? Yep. So is this post-COVID buying cycle going to take 3 to 5 years actually to play out? It's not done, right?
Yeah. Well, that was the thing. So every company that was public, certainly, and anybody else sort of had this line last year of we saw 10 years of acceleration in the past year, and that was true. but it was usually with existing customers that we're seeing bursts of new use cases. Maybe Zoom
got all pulled in dramatically.
all got pulled in, but it was because just literally the demand of whatever the indirect relationship was, the B2B2C element was the pull-in. So Twilio obviously exploded because we're all buying DoorDash all day long, and so by definition, Twilio explodes. Zoom obviously explodes because of the obvious reason. So, but that was like the urgent sort of triage, sort of keep businesses afloat. That was not the we're going to now automate our business processes. That was not the sort of we're going to reimagine how we serve our customers over the long run. That was not the we're going to change the actual way that we work and collaborate and ideate and engineer things. Those are things that do take 2 years and 3 years and 5 years because there's software to get built, there's culture to change, there's organizational behavior dynamics that have to evolve, and that's I think the era that we're entering now. So last year was the sort of like you could see rapid expansion because everybody was in this sort of crisis mode. And so maybe the actual, sort of rate of change is going to be slower, but the size of the shift is as big as it ever has been.
Yeah, it's interesting. We might have hit this slide, excited for the next phase of growth.
I think all you're just finding my most inane tweets. So I promise.
Not all tweets.
I promise I tweet other things than just like I'm so fired up right now. Like okay. I'm so pumped.
Hold on, let me skip to another one.
Okay.
Talk just a little bit, and maybe this is not any more interesting than data, but this is talk a little bit about going up market and what you've learned. And what's interesting, we have a later slide, maybe we'll get to it, we won't. I think about how everyone characterizes the lines between categories differently, but I think today you say you're about half enterprise, 50-something-ish, right? Maybe 8% still self-service, right? It's not gone forever.
What number did you say?
8%, I think. Do I have that wrong? I got a slide.
Maybe on revenue. I don't know the
I'm
latest.
just not allowed to go back, or I would come and get it. And then 30 or 40% is sort of mid-market SMB, right? And what have you learned here in terms of, you've got two big growth vectors quantitatively. One is selling more and more to the base, right? Driving up ACV, I think. I'm not sure, right? But then more to bigger customers, outsized growth, right? So what's changed at Box as you go more enterprise at 800 million?
Yeah, so it's interesting. I've decided that like I don't need to get any points for the thing I'm about to say, but I do want to be remembered as still having this as a core part of the strategy, but I just don't care to talk about it that much. A lot of founders will come to me and they'll be like, "How did you do enterprise sales at the beginning?" And I'm like, I was like, we didn't. Like, we have always been a freemium product-led growth company. We just stopped talking about it because it's just like it's just not that much to talk about at some point. So these numbers are super important, but they don't come just because we do these super big enterprise deals all the time. They come because we have instrumented every element of our product to be self-serve, freemium, and viral. And then we have an enterprise sales team that goes and works with customers to turn those deployments into much more strategic relationships. And that was the balance that we lucked into early, that we made the bet on. And that's a flywheel that if you can get humming, almost just takes care of itself. So our model is most of our upsells of customers are the customer has already deployed the software, they're already using it, and it's just spreading. And then we go in and then we help that become a much more strategic deal. So I'm the biggest believer you'll ever find in product-led growth, freemium, viral adoption. If you can nail that for whatever category you're in, that is magic that makes SaaS so much more compelling than the prior era of on-prem software.
So I should know this, but I guess I didn't. So the majority, if you don't exactly know the number, we don't have to get into it, but the majority of these 100K and even $1 million deals is the sales team hunting existing accounts and thoughtfully presumably getting better and better over time at migrating them to bigger and bigger deals.
Yeah, right? and the way it works is literally it's idiosyncratic to every company in wherever they are in that journey. So sometimes it's going to a line of business and finding a couple of use cases and then rolling it to the CIO. Sometimes it's going straight. But
even 2021 for Box, at Box's scale, that's still the predominant way you get the bigger deals, right?
Yes.
Is silos and land and expands and growth.
I don't know of another model that you can do in cloud. So, and I'm sure somebody out there, maybe Palantir or something, is doing a completely different approach. But like for all of us mere mortals, like you get adoption, you build hopefully a great product, you get lines of business and IT to sort of connect the dots at some point, and then hopefully you drive bigger and bigger deals.
No,
Well, it's just interesting to me that, I mean, every business is hard, right? It's not any easier being a CEO today than it was 1 year or 2 years pre-IPO, right?
Yeah.
But the brand gets bigger, right? And I would think in 2021, you'll have CIOs that have deployed Box now 3 or 4 times over their career. You would think they would come in and say, look, Aaron, I want to do a $500K deal. I want to do one, because I've already done this. I don't want to spend 5 years. I'm ready to roll it out across my new gig, right?
And that does happen. But last quarter we did, I don't know, 74 deals over $100,000.
Yes.
So that's a fraction of those
But it's
deals.
still a small fraction.
And you still have so many more that are just, they've adopted more of the product, and we have an incredible, account executive that goes in and connects the dots. And that's the majority of our revenue still.
So do you think product-led growth is nothing new?
Well, I think there's ways that it's gotten way better. But
Better at it.
now we'll have a Slack channel that will automatically ping the sales rep that says, hey, there's some usage pattern here that you should go and connect the dots for the client. So I mean, the instrumentation we get, the automation we get is 10 times better. But I mean, if Martin Mikos was here, we'd be talking about MySQL.
Yeah. He'll be here later.
Oh, okay. Yeah. I mean, he was doing product-led growth in 2003.
Yeah.
So literally, you download MySQL and then they sell you an enterprise version.
Yeah.
So we haven't really changed that much in 18 years collectively as an industry.
The instrumentation maybe is a good summary.
You get a lot more telemetry now.
Yeah. So this slide, let's at least spend a couple minutes on this. This is so interesting, right? So from 2020, if I have this right, to 2022, attach rates from 10%, 73% on multi-product, right?
Yeah.
What is this?
I didn't actually realize this was going to be an investor conference. This is great. So okay. I need to alert my IR team about what I'm doing here.
I take this stuff and I find 5 things that are interesting for founders, not for Wall Street. I don't really care whether your stock price are up or down, right?
Yeah.
I want to help founders.
Today's not a great day for anybody's stock price. Yeah. So.
Well, but we're all going long, aren't we?
I hope so.
We're all going long.
Okay.
But this is pretty. I mean, I know that this is a way you're also sharing this with Wall Street, but this is a big jump from 10 to 73%.
Yeah. So this is so this is maybe the ultimate financial maybe proxy for what's going on, which is we have a multi-product platform.
Yeah.
We've bundled it now. That I would argue we took too long to do. So so we had this sort of dynamic where you had to go to the customer and sell one product at a time. That was, I mean, it's like, duh, that's obviously a bad idea at some point. So high calorie, highly inefficient sale, and then the customer gets this invoice of like 9 line items, and then they're just like, well, I don't want that line item for that many people, and then you're like, no, but you got that discount because you're buying the other stuff, and it just gets confusing. So we did now these suite bundles, and that's this stat is our 100K plus deals that have a suite or a multi-product plan, and so that's been fortunately a big driver of our growth.
Well, that was interesting. What I didn't realize, a slightly older version of this I had on the SaaStr website had like 3 lines of all your different products, right?
Yeah.
And the new one has 1.
Yeah.
And that's because you learned selling 3 different products to the same base was not worth it, right?
Yeah, it's a lot better to just sell the whole thing.
Yeah, it's interesting. And then this last one on this one that I grabbed, because this is telling. 125% NRR with multi-product, 90% with no add-on. That's like not a small delta, is it?
No, and this is I don't know the date in which this stat was shared, but so I want to
like beginning of the year. So let's consider it not inaccurate today.
Okay, well I'll just say whenever it was published, it was accurate. And so what I'll say is that yes, if you can get customers to be more strategic,
yes.
Think about your platform more strategically. In our case, that can be approximated by customers that adopt multiple solutions. Then they stay with you longer, they grow faster, and that's the result we see in the net retention rate improvement.
Would you have done more of this multi-product stuff, lean in more on security, compliance, and everything earlier?
Yeah.
If you'd realize where the world would be today?
Yeah, totally.
Yeah, I think that's everyone's lesson.
Yep.
One last one. Well,
okay.
Maybe we had that one. We will ignore this one.
Okay.
Just quickly, interesting, now that you're all this multi-product, everyone's TAMs are crazy today. Everyone has a $70 billion TAM or $120 billion. Now that you've been through this, and actually the initial box category maybe is mature, right? The very early, folder on the web is immature. But Is there any ceiling in TAM? Do you even worry about this or think about this? Do great teams find an infinity TAM?
Yeah, we've always been believers in bottom-up and top-down TAM analysis, and I don't know that that's an industry shared term or not, but we will look at top-down, i.e., where are the dollars going in the categories we serve.
Yep.
And so this is an example of some of the categories that we serve, and now you could add e-signature as an example. But so top-down, globally, people are spending $55 billion a year on things about storing data and files and working with those files and securing those files. Okay, so that's sort of like the TAM you're going to go disrupt. And I'm sure half of this room has read Blue Ocean Strategy, and the other half has read Innovator's Dilemma. I'm massive fans of both those books because the more you can be taking existing spend, existing categories, but just changing the variables a bit, so they favor your strategy. So what we do is we go to customers and we say, what if you had one solution that did all of these things, as opposed to buying individual products that do parts of those things? That's our disruption play. So that's your top-down analysis. And then your bottom-up analysis, and this one, you're now seeing in VC slides more and more, and so it's obviously losing its credibility, is you say, okay, well, there's 1 billion end users on the planet that need some higher-end content management collaboration functionality. And so you could do various ways of discounting and squinting your eyes and saying, okay, well, if everybody paid X amount, or if you got this percentage, you'd also be able to get to a very similar TAM number. So we've always tried to triangulate using those two metrics. And I'm actually still a believer that is a fair way to do it.
Cool. Well, Aaron, I wanted more I wanted to ask you, but it'll be the next SaaStr annual. Thanks for your time.
Sorry. Thank you.
Let's
See
give
you.
up a hand for Aaron.
Bye.
Okay, is this on? Oh, hi everyone. How's everyone doing? All right, some good pre-lunch energy. All right, we were just saying, I'd love to get a show of hands. How many of you are CEOs and founders in the audience? Okay, great. How many of you are hoping to be a unicorn at some point? Perfect. All right, then you are certainly in the right session, I would say. So I'm Casey Renner. I'm an operating partner at OpenView Ventures. We love B2B SaaS. We love product-led growth, and I love talking to people. So this is perfect, and I'm honored to be here with 3 of my favorite CEOs. So I'm going to have each of you, I'm hoping everyone knows who you are at this point, but if you could just say a quick one-liner of what your company does in your own words and how long your company's been a unicorn for. Let's start there. Steve, you want to kick us off?
Sure. My name's Steve Sloan. I'm with Contentful. So Contentful is a content platform. Imagine you're going to find that pair of red sneakers online. That picture of those red sneakers, everything about it has to live somewhere. It lives on Contentful for thousands of companies around the world.
Perfect.
And so we have been a unicorn, I guess, officially as of this year.
Awesome. Bernie?
Hi, I'm Bernadette Nixon, CEO of Algolia. And those red sneakers that Steve was talking about, you would use us to find them. So we're a search and personalization platform, API first. And we've also been a unicorn since earlier this year.
Fantastic. Tope, you've got almost red sneakers on, so tell us who you are.
Hi, everybody. I'm Tope Awotona. I'm the founder and CEO of Calendly. What we do at Calendly is we make it super simple to schedule, prepare, and follow up in your external meetings. We've been doing it for about 8 years now. Our customers range from individuals all the way through large enterprises that do business with us to the tunes of hundreds of thousands of dollars. And your last question was, how long we've been in a unicorn?
Forgot already? Come on.
I can be really precise with that answer. December 1st, 2020. So
awesome. 9 or
so months.
All right. Awesome. So, researching coming out, we hear a lot of talk about unicorn. We're here to demystify the unicorn buzz. But, when the coin was termed, I think 2013, there was something like 39 unicorns. And flash forward to today, there's over 530. 3.5% of VC money goes into it. But only 0.006% of companies will become unicorns. It takes an average of 7 years. So how did you, we're here to tell these people how you did it. But I guess to start, what are the traits of a unicorn company in 2021? And Tope, I'll start with you.
Yeah, so I think there are many, many traits. I think the one that I get the most excited about, and I think the one that matters most, is solving a meaningful problem for a large, at scale, right, for many, many different people. And so if you've created a product or a service that is driving revenue for your customers, that is helping them make their customers happy, that is helping them keep their employees happy and successful, and doing that at scale to the tunes of millions of users or millions of dollars in revenue or hundreds of millions of dollars in revenue. I think those are some of the successful traits of a unicorn.
Mm-hmm. Bernadette, what are your
I think the other thing that I would add to that is disrupting. So, growth, if you're going to get to be a unicorn, you need to have aggressive growth. And so disrupting a marketplace, I also think is another important part, and helping or making your customers think about their problem in a different way.
Yeah.
You want to tack onto that?
Yeah, absolutely. Maybe just to double down a little bit on something you said. So I think there is this separation. Like, we all obsess about, everyone here, right? About our business and our customers every day. Those are the things that we can control. The unicorn status is actually given to us from someone else. It is a valuation. So what does someone else think about our companies? And so the thing we want to obsess about is exactly what you're all talking about, which is creating a really magical customer experience. But the thing that really separates, I think, from an investor standpoint, the difference between companies who stay a certain size and companies who they believe can get bigger is the size of your total addressable market. Mm-hmm. And that's one of the things that I think is important, because when we're all launching a company, the first thing we care about is 1 happy, and then 10 happy, and then 100 happy customers. And at some point, we have to assess whether or not the opportunity we're going after is in fact big enough. And one of the things that was so interesting to me about this last round of financing was how obsessed that set of investors was with how big this could be over the next 5 to 10 years. And that, day to day, we all probably have really hard things to go do, but it was that longer term view that gave them the conviction to invest, in all our cases, a lot of money realistically, but with the belief that it would pay out over a very long period of time.
Yeah. The other interesting thing was when we were in our latest funding round, I agree, the investors were interested in the size of your TAM or the service addressable market, but we had a very interesting reaction from one of them because they were, we talked about how many customers we had over 100K in ARR, and then how many customers we had over $1 million in ARR. And one of them interrupted me at that point and said, that's all I needed to hear. So you got a big TAM and you can capture it.
Yeah. I want to go back a little bit. So there's obviously a lot of early stage companies here, and we certainly have a lot to talk about on the fundraising and growth side of the house. But if these folks want to be on the 2025 unicorn list, what's sort of step one for them? Bernadette, what metrics should companies start tracking early on?
So I think there's some basic ones that apply to every type of company, your ARR or MRR, depending upon your business model. The growth in that metric, and then also your NDR, which is your net dollar retention rate. Some people call it NRR. And that's an important one. So best in class for your net dollar retention rate, which is a combination of your churn over the last 12 months, gross churn, as well as what additionally you're selling into that set of customers. Best in class is over 130%. Nobody just jumps there, or very few. I guess, Snowflake has 169% right now. But, if you think about it, if you have an NDR rate of 120%, your company is going to double in 5 years. If you've got 130%, your company will double in 3 years. So that's a really important one. And then I think once you get from there, there are certain metrics that you need around pipeline, around signups if you're a PLG company and that sort of thing. But I think you've got to pick your North Star. And I think it's so easy for us to kind of get bogged down in so many metrics. You've got to pick 7. You can't keep track of more than 7.
Yep.
My opinion. That's all.
All right, so if you got your metrics from a hiring perspective, and Tope, OpenView's worked with you on a hiring from the beginning. But what was your most important role from 100 to 500 million and beyond, or just even looking back, your first sort of big hire? What have been your key hires on your journey?
So every single hire the hire you need to fill now feels like the most important hire, and that will always be the case. But as I guess maybe the way I think about it is like, what is the sequence of things you need to get right to have a business that's doing, that is worth $1 billion in enterprise value? And for us, the sequence really went like this. First, we really figured out the product, and it was really about building a product that could solve meaningful, important problems for our customers. Like, once you then have that, the next thing you want to do is get as many people in this world to know about that product, right? So the sequence, I would think about it is, first, let me make sure I have a product that solves important problems for our customers, and I have the proof points to show that. And then how can I, tell the world about it? And then the third thing I started thinking about is culture and values, right? You'll find out very, very quickly that once you have a product and you know a way to get it to the world, the next thing is you need people to help you advance that mission, and and you need to create a culture that attracts those people. So those are the 3, I would say, big hires. Yeah. And then obviously operations, right?
Everything
quickly followed.
Yeah.
Right?
Steve, what are your thoughts on that? Because you've been with Calendly from the very beginning, and so have seen those hires through. And then you've not been at Contentful as long as Tope has been with Calendly. But what were your key hires when you came on?
Well, I think one of the things that I want to double down on that Tope said is, as soon as you start hiring dozens or tens of people, getting to a place where it's a bit more formulaic in that, Tope mentioned values. And that's the one thing I've seen really break down at a bunch of companies when you start to scale up. When we're 10 people or 30 people, you interview every single person, and the reality is that there's so much touch between the founders and the senior leaders every single day that the values are super organic. There then comes a place where other people are doing your hires for you. And then you need to know, as a founder, as a leader, that those people who are joining your company really do align with your values. And so one of the things we did was to go back and get a little bit crisper, both about how we articulated those values. We brought it down to just 4. I don't think there should be many more than that. Everybody should be able to articulate them, on the spot all the time. And then we introduced that into the hiring process as the first thing. So the values screen is the first screen, the skills screen is the second screen, and it was that combination that I think has been really important for us. We did a lot of hiring in the last 2 years, and the culture hasn't fractured or broken or become multiple cultures within different teams. But it was only because we got really, really intentional, and the companies I've been most excited to be around, whether I worked with them or not, have all had that really, really consistent values and real clarity about the fact that they are a cost of entry. Like if somebody doesn't share those values, they may be incredibly skilled, but they're not going to join the team.
Yeah, that makes sense. All right, you've got your metrics, you've got your values and your people. Next on the unicorn checklist, can you get to unicorn status in just one with a single product? I know you and Bernie were chatting about that, so I'd be curious, Bernadette, we'll start with you on that one.
So can you become a unicorn on just one product? Yes, you can. What Steve and I were talking about backstage was, it takes a long while to launch that second product and for it to reach whatever you call it, lovable maturity where you can, replace most of your competitive products on the market. So, there's a fine balance, I think, in terms of introducing it too early versus too late. There's a little bit of art in that. I'd love to hear from you, Steve, on that. But the one thing that I feel really, really strongly about is as you're thinking about introducing that second product, make sure it's a product that's applicable to your main persona or the decision-making unit to which your sellers, your go-to-market strategy is already aimed. Because otherwise, they will have a hard time, and they'll have to do what I used to call the up and over. I'd join a company, there'd be a great second product or a fantastic acquisition, and I'm like, yeah, you don't sell that to that person, so how are we going to navigate that? And it ends up being hard for your people in the field.
Certainly, if you're Google, you can have one product. It works pretty well. But for many of us, there will be at least add-on products. And a shorthand for what Bernie was just talking about is product channel fit. And we obsess about product market fit with our first product so much. Did it get any traction? Wow, we've seen so many great products die on the vine because they didn't have good product channel fit. It's to a different persona, it's a different sales motion, it might be in a different geography, et cetera. And so as you're thinking about other problems to solve for your customers, because I think there's a lot of confusion about second products, which is some people say, oh, you shouldn't listen to your customers, they don't know what you want, or they don't know what they want, or others would say, and which was what we would say, you actually have to obsess about your customers' problems. Our argument is that actually asking someone, well, what do you want me to do for you? It's just not a very good question. But if you can find great ways to form that question, they can tell you what their biggest problems are. And inevitably, there are problems wrapped around the core thing that you do, and then those become interesting add-on products, but only if you have good product channel fit. Otherwise, it is likely to both be distracting, and honestly, we've seen lots of companies get swamped, particularly at that sort of $25 to $50 million in revenue zone, where they start to split their efforts, and it really, really slowed the company down. And once that decelerates, it can be very hard to re-accelerate.
And just to expand on that, on Steve's point, in our case, we have a single product, and we will for a very long time. And part of the reason that we've been able to do that and still grow and become a unicorn and still grow at a pretty fast pace is really expanded the types of customers we can serve with that one product. Right? Yep. So we launched the product, and we initially had product market fit with individuals, and we solved scheduling really, really well for those individuals. But it turns out as we're solving scheduling for those individuals, they also work in teams, right? And it began to help us understand that team scheduling, and when I'm scheduling with my team and pulling my availability with my team, is a whole different set of considerations there. And so we evolved from just being able to solve scheduling for individuals to being able to solve it for individuals and teams. And what happened along the way is we actually found that when we did both of those things, our ability to retain those customers, one, doubled, and it provided massive growth opportunities, right? Yeah. Along the way, we also found out that just solving and scheduling alone for our users was not enough. They wanted us to help them schedule their meetings seamlessly and efficiently, but it also wanted us to actually improve the outcome of those meetings. And that created a whole new set of revenue generating opportunities for us and value creation for our customers. So taking that single product, right, but solving it for, serving many different personas with it, whether it's individuals and teams and enterprises, across across geographic boundaries, across different industries, is yet another way to grow before you start to thinking about a second product. Because there are more synergies taking that same product and solving it, using it to solve the similar problems for other users than it is going to a second product. Yeah. So you want to make sure you maximize the juice from your first product before you begin to
the second one. How many people here are Calendly users? All right, good. Just wanted to make sure. Yeah, I'm like, are you a Calendly user, Tope? Like occasionally?
Sometimes.
Okay, perfect. All right, before we move sort of on to the growth piece, what separates a unicorn from the rest of the pack early on? Tope, did you know when you founded this company and you're like, I want to make scheduling easier, were you setting out to be a unicorn, or were you just like, I'm going to build this great product that solves a need for a pain point I'm facing, and lo and behold, here we are. But even from Bernie and Steve, when you've seen other companies, are you like, that's going to be a unicorn? And if so, why have you said that?
Yeah, I did not. I was not thinking about being a unicorn when I first thought about building Calendly, and I'm glad I didn't actually. I actually think that the responsibility of building a $1 billion company on day one when you don't even have a product, you don't have a first customer, would have been incredibly daunting. Yeah. And I think it is actually good to be a little bit naive about all the possibilities on day one, right? What I got really, really excited about is, one, first, I had a problem with scheduling, and I got really excited about, I spent a lot of time understanding the market, and in those 6 months that I spent studying the market, I got really excited about what could be built, and this great problem that nobody else seemed to kind of see the urgency around. And so just being able to prove that there's a better way to schedule and you could actually get people to adopt that product was what I was very excited about. And that's really what drove me in the early days at Calendly. Fast forward to, like I said before, we started with individual users. Along the way, as you begin to solve that problem for those initial users, you realize that to retain these customers that you fought really hard to acquire, the best way to actually retain them is to continuously do more for them, right? So those individuals, the best way for us to retain those individuals is actually be able to solve their problems with, be able to serve them when they become teams, and so on and so forth. And so being able to retain those customers is ultimately what drove the desire to grow fast, and many years later, it's turned into $1 billion plus market cap business.
Here you are.
Yeah.
Talking about it. Bernadette, what sets a unicorn apart, do you think, early on?
Well, as we talked about, it's having the disruption. But I think I agree with Tope. I think setting your sights on that on day one would be just so much pressure. Somebody said to me recently, and I think it's right, the amount of, the likelihood of becoming a unicorn is inversely related to the amount you actually talk about becoming. So I really believe that that's true. I mean, I think, to Steve's point, building the business, solving really meaty problems, and so that you can grow with those customers is really where the focus is. And when you get to do that and you do it right, and you've shown you can grow consistently over a period of time, and out into the future, 5-10 years, that's when you get the moniker, but it is a byproduct. I don't think it's the primary goal at all.
Yeah, I agree.
Build a good product, and they will come. Sounds simple, but not everyone does it.
Super hard to do.
Right, so the path to unicorn status is different for everyone. There's some people who, they just want to dominate the industry. They take a bunch of money and they worry about making money, down the line. And then there's other folks, Tope, I'd say, you just built this great product. You spent less on sales and marketing, dare I say, product-led growth that we love to talk about at OpenView. And the growth comes. But, I think the thing you see across a lot of unicorns is they've all, for the most part, defined their own category. So how do you create, this path to success and create a blueprint for becoming a category-defining company when there aren't predecessors in the space to look towards? How do people think about that?
Yeah. Again, in our case, we weren't too obsessed with the category in the early days. I think now we are, right? But some of the things I think that help are, in almost every single thing you're looking to do, somebody has done it before. Maybe not directly in your category, maybe not directly in your space, but there's a very, very clear example that you can follow. And so I would look for those parallels, right? So for us in the space of scheduling, there are no scheduling unicorns, right? But if you look at what are other businesses that are out there that have taken what seemed like a really small problem and expanded around that problem and built massive businesses. There are many, many different examples. So digital signatures comes to mind, right? You look at EchoSign, you look at DocuSign, right? You look at Dropbox, you look at Box, you look at what those companies have done. And I think following the...
Oh. Little party.
They really love that answer.
Yeah, they're super pumped about this.
Yeah, so I think following the examples of those companies is always really good. There's, so even when there are no direct competitors, or there's always these indirect examples you can pull from.
Yeah. Steve, what do you think? We did say we were going to have a dance party during, so I think that was, I don't know if that's our time to break.
Hope's going to start us off.
Yeah, go.
That's an inside joke.
Yeah.
So the thing, from a category standpoint, I think there are maybe two topics that are really helpful if you're thinking about the category you're in. One is the topic is friends, and one is foils. So if you think about a company like Salesforce that did a beautiful job early on in creating or in co-opting a category, there was already a category known as SFA. There was actually a category known as CRM already, and they're an example of doing a beautiful job of finding a foil, someone else who is the anti-hero to what it is that you're doing. So it was the famous no software thing. And so they executed that brilliantly, obviously. There's another, which is the friend bucket, which is there a group of companies who can be successful together if you get a narrative that you tell together? So in our world, that's something called the Jamstack. And so a group of companies came together to talk about the fact that there's this new movement in software known as the Jamstack, this set of companies that are JavaScript, API, and markup is the jam in that stack. And it was the alternative. But it was only through that really chorus of voices that the category that we helped to pioneer in the beginning, which was called headless CMS, it had a little bit of each. It had some friends in the Jamstack, and it had a foil because the content management system category was a big category, but this was the headless one. And so we had to then define what headless was, why it was different, and why it mattered. But it wasn't until those two things came together that the traction of the company really started to pick up. And so as you think about the category you're in, think about friend and foil. How can you use those in order to generate more attention and to separate yourself either from the mental models people have or from the narrative that the dominant players have established in your category?
Gotcha. Company's growth journey isn't typically linear. So, how do you think, Bernadette, about, being flexible and continuing to evolve your go-to-market approach over time, especially, since, you came in a little over a year ago to Algolia? How have you thought, and you've seen crazy growth since you've joined, how have you thought about sort of that iterating on your go-to-market model? Because it certainly just can't be one size fits all forever.
No, and I think it depends upon the nature of the product that you have. I mean, we started as a product-led growth, API, part of the Jamstack, the Mac Alliance, so part of that, the foe model, that was the friend model, I would say. And so when you look at it, we grew for a long time as product-led growth. But because we also touch And that was through the developer. Our primary persona is still the developer. But yet there are other roles in that decision-making unit that come in when you start getting outside of search and into more of the personalization and merchandising kind of categories. And so that brings business people into the mix. And so therefore you need a sales organization to really have the translation conversation with the business persona in that decision-making unit. So it really, for us, we started as product-led growth. We layered in sales-led growth. And then as we have, we're a platform, so we can do search and personalization, for many, many different types of industries. E-commerce is just easy to get your head around. But you got to then figure out, well, how do you make your sales force productive? And that's around, well, as you were saying, articulating different plays, different types of problems that those customers that you have need servicing, and then figuring out how you package that so that you can become efficient at it. So because when you have a platform, you can do virtually anything for anybody, and that's great news. That's also the problem, because where do you focus?
Yeah. Yeah.
So it's a constantly evolving thing.
Yeah. All right, I'd be remiss if I didn't ask, now I think we've all mentioned product-led growth, and like I said, that's OpenView's favorite term to talk about. So do you believe all companies need that growth model to become successful and, in the case of this panel, become a unicorn, or can they do it without it? Steve?
It's certainly possible to do without it. So imagine you're selling a product and there are 100 target companies on the planet. The product-led growth model might not be the one that you need, because you can say, hey, here's literally a list of the people we'd like to get someday. We're going to find the decision maker within those companies, and it's an easy hunting ground. Now, if you hope to serve thousands of companies over time, the product-led model is one you might want to consider. And the reason is that you want to think about both the friction at the point of initial customer acquisition, and then the friction that is that's involved in adoption over time. And so, I love Calendly. I'm a huge fan. If you've ever used Calendly, it's sneaky addictive, right? Like, it gets in, and all of a sudden you realize this is how I want things to continue to work. And you send it to your friends, and then they get addicted too. Like, that model is so important. But the thing that's, I think, even sort of a meta concept on top of that is the fact that for so many years, there was this notion that if you sold technology, you sold to a CIO and her team. And so you could go to one buyer really high up, you could look her up online, you knew how to find her. For a lot of these other products where the users are acquiring, which is happening more and more and more, it's a different motion. And one thing I would warn against, and one of the challenges we find all the time, is whether it's investors or advisors or people you're bringing into the company who are used to that other old school model, they're going to think that's the only way to do it. And I would, to this room here, I'd ask challenging questions about whether or not that's true. All that friction in the process, is that really in service of our customers? Is that really going to help us get more customers more quickly? And I do think most companies would be well served to at least ask those provocative questions more often.
Yeah, there's so much I can say about PLG, and there's no doubt that I would not be sitting on this stage if Calendly did not,
build a great
use
product.
the PLG model.
Yeah.
Right? There's no doubt about that. I mean, we've grown really fast because of that. But the way I like to think about PLG is that the hardest part about anything is getting started. Like, bar none, the hardest part of anything is getting started. And that's really that's the true value of PLG. In every business, whether it has a problem that lends itself well to the PLG model or not, has an opportunity to really reduce the time and effort to value. Like, what is the amount of steps? What is the amount of steps a customer has to take from the second they're interested in your product? Right? How many people do they have to talk to? How much time do they have to wait before they can actually touch the product and get value out of the product? And if you're constantly looking for ways to reduce the time to value, reduce effort to value, you can get the benefits of PLG. I'll give you an example. There's a friend of mine who runs a very successful business that is sales-led. And one of the things we were talking about with this friend's business is that a few years ago, they made this push to convert most of their customers to multi-year contracts. They found that when they acquired customers and put them on multi-year contracts, they just retained them 2-3 times better. What happened inadvertently in the process is that it extended the sales cycle. Right? So they retain customers better, but now it takes them 3 times longer to acquire a customer. And as a matter of fact, they're actually losing some of the customers in the process. And so, long story short, they found an opportunity and something they're going to look into to see can we grow faster, but by going back to this shorter contracts, right? And that's what PLG is about, just reducing the friction to make it easy for your customers and drive growth in the process.
Yeah.
The interesting thing is, if you look at all of our businesses, each one of us have disrupted the traditional players in the market. And everything that used to traditionally be enterprise, we've all challenged the norms on that. One of the practical things that we found when we were sort of going from being pure product-led to having tops-down sales-led motion as well, was that we made a decision, this is a while ago, that our betas, our new products or new add-ons would only go out to the enterprise. And it elongated the development cycle. And so I got with the co-founder and we had the discussion. We said, yeah, let's scrap that. Let's make everything available through the self-service channel, product-led growth, and you innovate. You find the feedback loop is so much quicker, and the pace of evolution is so much quicker as a result. So I've lived in both. I would only want to live in at least a hybrid of a PLG SLG now.
Love that.
The interesting thing about, maybe going back to your previous question, the interesting thing about PLG, if you do it successfully enough, you'll eventually have to introduce a sales-led model, right? So, so the worlds, eventually collide. But I think that guiding principle of no matter which model you're applying, reducing time and effort to value is the North Star.
Yeah, I know. I think PLG doesn't hate sales. I think that's
right. We have a very fast-growing sales team at Calendly.
Yeah. So
I feel like I cut Steve off.
Oh yeah, Steve. Sorry, we were getting so excited about sales and PLG.
No, I actually think you just hit on it.
All right. So you approve.
It's not. That's the thing. It's not anti-sales. That's like the product-led growth. The part, and Blake and I have talked about this. Like the P in product-led growth. Some people interpret that as like the organization, the product organization within your company is sort of like in charge. It's totally not what it means. You're actually saying the customer is in charge. And one of the things we've found that I've been in now 4 businesses that had this dynamic. It does 2 things. One, it gives you this quick feedback cycle, but holds you really accountable. Because in a product-led business, if you don't live up to that promise, they go away. Right away. And so your ability to create something on an ongoing basis that your customers really love is not just obscured by a 3-year contract. We just displaced a legacy player at a very, very big company because they hadn't, the customer had become disillusioned with them. They were on a 3-year contract. They were 2 months from the contract coming up for renewal. So that sales team came in to start talking about this very big company about a renewal. We had been live for 60 days. So the software was shut down already. And it was because their whole motion at their company was wrapped around this 3-year cycle. In a product-led growth business, we think daily, weekly, monthly. What do those metrics look like? How happy are people? What does adoption look like? And so I do think it inoculates you from some of those challenges that you find as you scale, which is you get a little bit more distant from your customers, and then you have that risk of you yourself being displaced.
Customer-led growth. There it is.
There we go.
New term. All right. We only have 10 minutes left, so I want to talk about fundraising, because obviously that's a huge component of becoming a unicorn, and the valuations, to your point. It's not really up, I think you said earlier, it's not up to you. It's what, investors essentially value your company at. So, Bernadette, how have you thought about raising and deploying capital? Because you came in, as a CEO and raised the round that put you sort of, at that unicorn status. How do you think about that? There's some companies out there that just think we're going to raise millions and millions of dollars at this huge valuation and, think about making money earlier, and then, there's others who think we're going to, raise this money, we're going to deploy it effectively. How have you thought about it since coming into Algolia?
So I think the first where I started was you want to raise the money when you don't need the money, because then you can act financially independent because you don't need the deal. So I think that's sort of the foundation block. And then, in preparation, you've got to make sure that you've got your story, you've got the TAM, you've got the proof points, all of that sort of stuff. And then when you get successful and you get a valuation you like, and then the most important thing is to get the investors that are right for you, for your business at your stage. So, in the early stages, it's the VCs, it's the people that have the operating, not unlike OpenView, that have the operating teams that can really help you bring more than just cash to the table. And when your later stages, you may, you look at, different types of investors that can be with you on the path to the IPO. They can buy not just in the latest fundraising round, but also when you go public. So there's different things you have to think of at different junctures, different stages. And then at the end of the day, you've got to grow, you've got to burn sufficient capital, but you haven't got to go, stupid. I don't know any other way of saying that, but I guess different people have different definitions of stupid, but
You took my next question, which was going to be, what was the most important quality you look for an investor? And Tope, I would love to ask you that question.
Well, so
full transparency, OpenView is an investor in Calendly. Yeah. So
I have a general rule of thumb for how I approach big decisions. I almost always start with my own independent viewpoint of what I think I need. Or what I think is important in that. So whether it's hiring an executive or picking an investor or picking a partner. And then I get really excited when I meet somebody who completely flips the script, right? So when I think I have all the answers, somebody who goes and changes all the questions, that's a really good partner for me, right? So very, very long-winded way of saying partner with people who you can learn from, and expand your thinking and broaden your horizons, and get you in conversations that you otherwise wouldn't be able to get into yourself. So those are some of the things I think about.
Steve, is an IPO a be-all, end-all for a unicorn?
No. And we think of an IPO as a fundraising event, and so it's a financial event, number one. Number two, we think of it actually as a marketing event. It's an opportunity for a broader set of people to become aware of the company. And if you look at the companies who've been successful over time, the IPO is a little blip along the way. If I could maybe just throw out one thing, try and purge from everybody at your company's vocabulary the phrase exit, or the word exit. It's not an exit, it's the starting point. Yeah. There might be some people who aren't in your company, some investors who need a liquidity event, or they need to leave. They're going to go off and recycle. But this word of exit, I find it really strange, because everyone here, we're all builders. We build stuff for a living. We're not trying to exit. In a perfect world, we get to build stuff for decades. And so I find that word to be really, really corrosive in terms of getting everybody to think about the long term. To Bernie's point, how we invest in a wise way and in a disciplined way. Because if you're thinking about the exit, which is 12 months or 24 months or 36 months out, you do build your business differently than if you think we want to be here for 5, 10, 20 years.
Yeah. Right, we've got a little over 5 minutes left. So, for the people in the audience, I just want to kind of, with each of you, if you had to summarize all the chatting you just did for 45 minutes into, a couple of takeaways where you're looking at these early stage founders who want to just grow a successful business, what is your top piece of advice for them? Unicorn or not, which I think we learned, don't go ahead thinking you're going to build a unicorn, just build a great product. But what would your one piece of advice be for all these founders out here? Or your key takeaways, dare I say.
Bernie hit on something a little bit ago, which is thinking about investors by stage. I would think about your company by stage. What's right at 0 to 1 million, and what's right at 10. And then there's this really, really funky sort of Bermuda Triangle between $20 and $30 million in revenue. That's a different one at 50, at 100. get advice from people who know a lot about the stage either you're in the middle of or you're trying to bridge to, because the advice is radically different, the investors are different, the questions are different, stage by stage. And so I think sometimes the advice gets blended between stages, and much of that advice can be unproductive for the moment you're in.
Building on that, I would say that also bleeds into your hiring plan. So as you go through different stages, you want people that have been on the journey with you since day one to be there, as you go forward and grow as a business and as a company. You also need to blend that with people that have stage-specific experience. So you're screening for values, you're screening for skills. Also, screening for stage-specific experience can be really, really important because, again, you get that impedance mismatch otherwise sometimes.
Yeah, I would say remain customer obsessed, right? As the business grows, your responsibility as the CEO also grows along with it. You have obligations to your customers, to your partners, to your employees, to your investors, and it just increases, and to the public, right? It just increases every single day, and it's very, very, very easy to lose that closeness with the customers that really got you there in the first place, and just want to make sure that you don't ever lose that. So for me, in my case, for example, till today, I still make sure that I have at least one customer interaction every single week, and it takes a lot of different forms. It could be an email exchange with an individual user of Calendly that I could have sent to somebody else to take care of, but I want to actually learn firsthand what it is, what the opportunities are, what the challenges are with using our product or doing business with us in general. So find those opportunities to just stay connected with your customers. And even though you have many, many people who can do it, and you can get a report, there's nothing like that.
Have any of these people got an email from you?
Beg your pardon?
I said, have any of these people got an email from you? Has anyone got an email from Tope as a customer of Calendly?
Oh.
All right.
Nice.
Got one. Phew, that would have been.
Well, I mean, yet another way to stay in touch with the customers is, a Calendly link, and you can stay in touch with a lot of customers that way.
Yeah. All right, I have one more question for you, and this is for those of you who know me, a very Casey type question. And I've talked to I think Tope about this, or sent y'all an email. But so unicorn was this magical creature, this magical status that nobody could really get to when the term was coined in 2013. But now it's all the rage. So what do you think what's the next thing people are aiming for? What's the next creature? And I think there's been some animals thrown out there, but I would love to hear what you think that it should be. What's your next goal?
So it's I think it's not a creature. Well,
Okay.
it's a creature.
Okay. Yeah. This is your answer. So whatever.
I do think, as we think about the number of unicorns that have been built, if we think about the value that the people in this room are going to generate over the next 10 years, this is historically transformative in terms of how much wealth and value can be created by a relatively small community of people distributed around the world. I do think we are due for a shift in the conversation, or an addition in the conversation, to this notion of more of like the giving tree, which is there's this book that was written in the 60s. It's about this. It's a beautiful book about this tree, and first it gives the family, mostly a boy in this case, shade, and then the apple, and then it's used to make a number of things. And at the end of the day, it is used actually as a stump on which this now older man can sit. And so I think the conversation around giving and contribution has started. It's really a wonderful part of the community we all are a part of. I think it can be an even bigger part of the conversation even earlier in the life stages of companies, because I believe, are uniquely poised to transform our communities in radical, positive ways over the course of the coming decades, based on the value that's created by all of these unicorns.
So the unicorns are becoming a giving tree.
Giving tree.
Done. Bernadette.
Yeah, I feel very trivial with my answer now.
Yeah, I know that one.
Or I'm about to. I was thinking of a shenu, which is a winged lion.
Okay.
Because it had to still have wings for me, because we need to soar in order to be able to continue to grow and service our customers. But I don't know, just the roar of the lion. Maybe it's the hair. I don't know.
Yeah. That'd be what you would be if you were an animal right now.
my spirit animal. I don't know.
All right. What's your next?
So I spent some time on a safari
You
trip
got 30
this
seconds,
summer.
so you better be quick here.
Gorilla, maybe. I know they scared the crap out of me in the jungles of Rwanda a few months ago, so that feels, maybe that's what.
That's your thing?
Possibly. I'm not a branding expert.
Okay, no, that is true. You are not. All right, awesome. Well, just kidding. I love Tope. All right, Tope, Bernie, Steve, thank you for sharing your insights. I hope all of you go out and build a unicorn, and we'll see you next year. Thank you all. All right.
Hey, folks, good afternoon. It's good to see so many familiar faces and folks that's getting to meet for the first time here in person after 18 months of stuck on Zoom. I'm here today to share a few of the secrets that we've had scaling Zapier to over 500 employees. Now, I'm told Zapier is unique for a few reasons. One, we've been distributed for the decade of our existence. That was quite unique when we first started doing that. Now it seems like the norm for a lot of us. We've also largely built the company bootstrap. We raised about $1 million in a seed round, but beyond that, we've scaled the company with cash flows and our balance sheet. Also, we've largely done this without a sales organization, which also makes us somewhat unique. So today I'm going to share some of the lessons we learned scaling. But contrasting from the lessons that I've had, I'm going to share from some folks you normally don't hear from. Today we're going to hear from a lot of founders, CEOs like myself. We'll hear from A-tier executives. We'll hear from some great VCs. But there's a group of folks that we don't necessarily always hear the lessons learned from them. And these are the folks that form the backbones of our companies, the early employees. And so I talked to 20 of our earliest employees. I found some of their best lessons learned that they've had along the way. And hopefully some of these might help you too in building your companies. So this is the group of folks we're going to hear from. So we'll go through them one by one. First, we hear from Zay. So Zay shares, create scrappy solutions that are going to get you 80% there. They're going to last longer than you think. When I was talking to Zay, he shared a little bit about the first MVP he built for maintaining our Zap template CMS system. He built this system over 4 years ago, and today it works with 20,000 different Zap templates. And it's largely that same MVP he built 4 years ago. Is it perfect? No, it's not perfect, but it got the job done and allowed us to focus on other things that were more critical in scaling and building the company. My takeaway here is the great news with a lot of no-code solutions, things like Airtable, Webflow, even Zapier itself, allow you to build things not just quickly, but also with quality. And so it's easier than ever to build these MVPs and actually have them go the distance for you. Next, we hear from Jordan. Jordan shares, don't brace for change. Instead, learn to love reinvention. When I was talking with Jordan, he shared a particularly busy period of time that he and his teams were going through. They were tasked with building out our original Teams product. Soon after they launched the MVP of that, they were focused on building revenue expansion. Then they had to focus on building a billing system to support our new revenues coming in. Then they moved over to supporting our company's product. After that, they came back to revenues expansion, all within a 12 to 18-month period of time. During this period, their teams were doubling and then splitting into smaller teams and doubling again and splitting into smaller teams yet again. And adding so many new folks, new leaders to this team, while also folks moving on from the company at the same time. It'd be easy for all that change to be daunting with folks, but if you build an organization that loves to reinvent itself, you'll find yourself more successful over time. My key takeaway here is that you want to have a learning culture, a learning mindset. Building companies is hard enough, and so you want everyone that you're bringing into your org to adapt that mindset. Next, we hear from Vicky. Vicky shares, when you're in the high growth stage, solutions to org problems are going to have around a 6-month shelf life. Don't be tempted to overthink that first version, and also don't be tricked into thinking that it's going to be one and done. Instead, build mechanisms that allow you to constantly evaluate where you're at and evolve over time. That way you don't have to rethink everything from the ground up again. My takeaway here is you're going to build for the problems you have today, not necessarily for the problems you might have a year or two from now. While it's smart and even good to think about the problems that you might have a year from now, 2 years from now, it can also become tempting to over-index on those things. And often if you over-index on a year or two from now, you'll find that the solutions to your problems don't actually solve the problems you have today. And so by all means, think about what's coming next, but make sure to really understand the problems you're facing today and build your solutions with those in mind, because like Vicky says, they're going to have about a 6-month shelf life. Next, we hear from Adam. So Adam shares, invest in a strong hiring and onboarding process from day one. Adam mentioned one of the things that's kept him around Zapier so long is the caliber of the people. And he attributes that largely to a great hiring and onboarding process. And the way you do this is, one, you make sure you have members of the team that are trained on interviewing and onboarding, making sure they know how to evaluate people that are going to be a great fit for those roles. Two, when they onboard into the company, make sure to teach them values, the way you work, what matters to your culture. Three, institute a great pairing culture. Pairing culture means that new folks have someone that they can go to for difficult questions to ask, and make sure that they have someone to ask those kind of nervous things and coach them along the way. And then four, you can repeat the cycle again at the end. So those folks who are new, as they become veterans, teach them how to be the next generation of interviewers and onboarders into your company, such that you have a strong hiring and onboarding process and great people in your organization over time. My key takeaway here is that you want to make sure that the job you have to offer is a great one. One of the best things your company offers is a good job. And so don't skimp on your hiring and onboarding process. Next, we hear from Paolo. Paolo shares people are going to be more passionate about the work if they have a good understanding of products and customers. One of the things Paolo mentioned to me was how we invested a lot in all-hands support. For a long time, we asked every single one of our employees, no matter what function you worked in, to do some support. And what this meant is that all of our folks really understood the product that we were building and what was special about it. And they also understood who our customers were and what made them tick. My takeaway here is, for as long as you can, I know folks are not going to love it. Not everyone's going to love it. Find some way, somehow, to get your employees in front of customers and get them using the product however you can. Whatever mechanism that looks like, make sure they spend time doing this. It will pay off dividends over time. Next, we hear from Stephanie. Stephanie shares startups are hard enough. So be someone you want to work with. Stephanie's been in a lot of different companies, and some of those companies have been great, and she wants to stick around over time. Some of them haven't been so awesome, but the ones that she does want to work with are places where folks who show up eager, challenge each other, work hard, push each other, and are largely other people that she wants to work with over time. And as a result, it's going to keep folks around. My key takeaway here is that it's really important for all of us to look in the mirror and say, hey, am I the type of person that others are going to want to work with? It doesn't matter how smart you are, how talented you are, if you're a jerk at the end of the day. And so looking in that mirror and making sure that you are going to be someone that someone wants to show up and work day after day, week after week, month after month, year after year to build something special with is really going to change the type of company you can build over the long haul. Ben has something very simple to share. People come first. I love this one. When I talked to Ben, he commented on 4 different aspects where we work hard to take care of our people. One is the employees that we have in the company. We work hard to have great rewards and recognitions programs, a great culture that folks want to show up to day in and day out. He talks about our customers and the work we do to build a great product and to build great services to support them over time. I mentioned that all-hands support mechanism we used before. He talks about our partner ecosystems and what we do to build an open platform to allow anyone to integrate with our product. And he talked a lot about our power users and how we try and support them by sharing their stories, retweeting their good news, and really showcasing the special things that they do. And all things we try and do, people come first. My takeaway here is that orgs exist to serve people. Don't forget that. It's really important to understand who your key stakeholders are and what matters to them, and work hard to serve them over time. Next, we hear from Steve. Steve shares, keep the values, but change the mechanics. Companies change constantly, whether it's your code base, your org chart, your systems and processes, your go-to-market motion. All of these things are going to change and evolve over time. So your organization needs something to ground itself. That could be a shared mission, a shared purpose, or shared values in the case of Steve. These things help people feel a sense of continuity over time. Next, we hear from Linz. Linz reminds us, have fun. It builds camaraderie and makes people want to stick around. Now, it's all great to have shared values, shared purpose, shared mission, but as your org gets bigger and bigger and bigger, it can start to feel a little more lonely. And so one of the things that Linz's team done is they've branded the support organization. They have this term called Keep Support Weird. It's kind of silly, yes, but as the org gets bigger, it helps it feel smaller, helps you feel connected to the core mission of the small team that you're working with. My takeaway here is startups are hard enough. We work hard at this work, and so remember, like Lynn said, have some fun. Next, we hear from Joe. Joe shares, don't hire for the sake of hiring. Ensure you've got a 6-month plan for all new hires. I was talking to Joe. One of the things he mentioned is his most successful folks that he's hired, he's worked hard to set expectations for what 3 months looks like, what 6 months looks like. He knows what those expectations are going to be so that when a person joins the company, they're much more aligned with what success is going to look like. When we haven't done that, when Joe hasn't done that, the results aren't as strong. My takeaway here, like Joe said, is make sure to define those expectations up front. It can be tempting to want to throw more bodies at problems and say, oh, if we just had 1 more person, if we just had 10 more people, we might be able to solve this. But if you don't have a clear perspective of how they're going to help, you're going to end up overspending and put too many cooks in the kitchen. And it's going to be hard to get things done. Oh, can we go back one? Oh, there we go. I think we're good. Andrew shares, core values will stick with you as you grow. Take the time to be mindful about those values. Hire for those values and live those values. When I was talking to Andrew, he mentioned how uncanny it's been. Some of those things that we thought through at 20 people have scaled with us to 300, to 500, and have ripple effects over where we've gone. Those sets of core values have really helped us be intentional about where we're taking the company. If you contrast to the places where we maybe weren't as mindful, those have also had ripple effects too. My takeaway here is one of the most common things I heard talking to folks, and Andrew is no different, is how important those core values are in establishing those early. We bake them into our hiring process, and so it's part of our hiring rubrics. We evaluate people against those. We bake them into our performance review process, and so it becomes a part of who we are, and it encourages everyone to make decisions with those core values in mind. Next, we hear from Rob. Rob shares, even when you have positive intentions, you're going to make mistakes. Rob reminded me of a time where we used to have a profit-sharing program at Zapier. We still do, but it broke at one point in time. That could be a story for an entire talk itself, but suffice to say, we had to rethink how we did profit sharing at Zapier. And it would have been easy to say, you know what, we're not going to exactly pay how we thought we would. But for a period of time, we said, you know what, it's going to cost us a lot more to do it the way that we should do, that we had said to do it, and we're going to go ahead and do it that way because it's better for our people. My takeaway here is it's not the mistake that kills you. It's how you respond that matters. If you own up to the mistake, if you course correct, people will understand. They'll give you a long leash. But if you try to ignore the problem or hide the problem, that's where you're going to get in trouble over time. Next, we hear from StatWonk, our local data scientist. StatWonk shares, measure outcomes, not effort. One of the key things here is that effort doesn't necessarily correlate to outcomes over time. So you want to be clear about what it is that you're driving for. When I talked to him, he was sharing a particular problem around code reviews. Code reviews at Zapier are really helpful. They help us avoid shipping bugs into production. But there's a challenge. If there's code reviews for everything, it also delays getting valuable features out to customers. So one of the things we've done over time is said, you know what, we're going to put in infrastructure to make sure code reviews happy against some of the riskiest changes. And then we find another path to production for other types of changes. If we were measuring for effort, we would say, hey, do code reviews everywhere. But that definitely wouldn't have allowed us to get great features in front of customers as fast as we possibly can. My takeaway here is, like StatWonk said, make sure you're focused on the outcomes here. But even better is if you can find a way to connect efforts to outcomes, then you've won the jackpot, because now you can drive that effort and make sure that it's leading to the outcomes that you want for your customers and for your business over time. Next, we hear from Justin here. Justin shares, beware of teams sharing code without clear ownership. One of the things we tried to do in the early days to go faster was to share code. You know, when you have an engineering team of 2, 4, 6, 8, it's tempting to say, hey, let's share these methods, and as a result, we might be able to go faster. What we quickly found over time is some of those initial designs worked. Some of them didn't work so great. And as more and more teams start to rely on those core design principles, you realize, oh, maybe some of those things aren't going to be as scalable. And what started as a thing that helped us go fast, quickly as the engineering org grows from 8 to 16 to 32 to 64, now becomes the very thing that slows you down over time. My takeaway here It's hard to re-engineer things at scale. Whether it's code, your go-to-market motion, your org charts, all of these things are difficult. To change them become more difficult over time. And so to the best of the ability, if you can understand the strong foundations and then scale, you're going to be better off over time. Next, we hear from Jesse. Jesse shares, it's easy to get ahead of yourself. Focus on solving current problems before thinking about solutions for future challenges. When I was talking to Jesse, one of the things they shared with me was a particular problem they were trying to solve in the early days. They had an MVP that they were working through, and as they started to work through, they were trying to anticipate all the things that could go wrong. So you might need a feature for this, we might need a feature for that. And they'd started to work on building it all out. By the time they got ready to launch this sort of MVP for some internal stakeholders, folks were kind of confused by it. They're like, this doesn't really solve the problem that we have. And so Jesse went back to the drawing board, tightened things up, got rid of a bunch of the features, and focused on the one core problem set that we have. When we shipped that out, the reaction was much better. People really liked what they had. My takeaway again here is that you want to focus on the problems you have today rather than the problems you might have down the future. Let the future problems show themselves as you get into the future, and worry about solving the things that you have right now. Next, we hear from Danny. Danny shares, there's no such thing as a small role. Help employees understand their impact regardless of if they're a manager or an individual contributor. Some of your earliest employers are going to get lots of opportunities that come their way to take leadership roles, to take management roles. And at first, it might seem like the best thing for their career path. In fact, some folks will thrive in those roles and do great. But as your organization grows, and if it grows faster and faster, your org growth might outpace an individual's ability to grow. And that's okay. And so it's important to make sure each of your early folks really understand that there is a path for them inside your company. My takeaway here is that it takes a village to build companies, and you really want to invest in all of your people and make sure they understand that no role is unimportant. Every role serves a purpose and has value over time. Next, we hear from Cooksey. Cooksey shares equip employees to prepare for a constant state of change. It's inevitable that org structures will shift and processes will break down. Cooksey and I were reminiscing about a particularly fast-growing year in engineering that we had. And he posited the question, I wonder how many people had multiple engineering managers this year. And we looked back at it, there's quite a few. But what maybe caught us a little off guard, there was multiple folks that had over 4 engineering managers in one given year. Now, obviously, 4 managers in a year is not the ideal state of things. That can be a pretty tricky thing to navigate. However, when you're growing fast, sometimes that kind of change is inevitable. And so again, it's really important to build an organization that has a learning mindset, that's willing to embrace change, and to really focus on what are the needs of the customer and how can we best solve for those things over time. Next, we hear from James. James shares, as you grow, it becomes important to move away from a mindset of, I can do it all, and instead become accustomed to delegating. James shared, one of the allures about joining a small company is the speed at which you can operate. You can build things fast. You can build something in an afternoon, ship it out to the site, and that can be such a fun, exciting time for companies. But as you grow, one of the things you quickly realize is you can't build everything. Your customers want a lot, and it can be difficult to keep up with all the demands and challenges that your customers are going to have of you. And if you try and do it all, you're going to burn yourself out. So when you find yourself in that moment, it's important to step back, take a deep breath, understand what you're best capable of delivering, then prioritize that work, and find and build a great team that you can delegate and assign things out to. My takeaway here is, again, it's really important to invest in your early employees. Your early employees are going to be stretched in all sorts of new and different ways. And the skills that they had in the early days, like building great things, may not be the skills that are going to help them into the future. And so you want to help them grow and evolve over time. Next, we hear from Micah. Micah shares, don't play business until you have to. Especially when you're quite young, when you're less than 20 people, it's really hard to have to do everything that bigger organizations can do. You're going to hear a lot from a lot of great folks today. We'll share tons of best practices. Many of those things won't be possible if you're a quite small company. And Mike's advice I find to be particularly good. You may not be able to build reports for everything. You might not be able to adapt the applications these larger organizations are doing. But what you can do is focus on 3 things. 1, are you building a great product for your customers? 2, are you helping sell more of your stuff? And 3, are you serving those customers really, really well? If you do those things, you can let other stuff, you can save that for later down the line. Next, from my co-founder, Mike. Mike shares, don't forget to invest in innovation, or you'll risk getting left behind. All new companies innovate in some particular way, and once you find product market fit, you can start to grow and grow and grow, and that feels great. But if your founding team is the only ones that are thinking about innovation, and they're now focused on scale, what you can find is that innovation starts to stagnate. So it's really important in your organizations to bring in other folks that are thinking about the future and are helping advance the vision and the mission and pushing on new things, not just operational effectiveness, but what is going to take you to the next chapter for your organization. For my other co-founder, Brian shares, hire senior people sooner. People that have been there and done that, but are still scrappy. This is something we didn't do early enough. I think we were fearful that folks would come and join the company and not really want to roll their sleeves up, get their hands dirty. But if you look around, even at an event like this, there's so many of us now that have so much more experience in SaaS and are still willing to roll our sleeves up. Now, yes, of course, there's folks who are tired and want to sit back and advise and point that. But for all those folks, you can definitely find senior leaders who are more than willing to come in and join a small company and carve out a path for the future. And last, I'll share my tip here. We've heard from a lot of great tips from early Zappians, but my advice would be break the rules. Best practices are going to get you the same outcomes as everyone else. The best companies are outliers, and they're outliers in 1 or 2 key dimensions. And so you're going to have to find a place in your organization that's you want to stand out. Whatever that dimension might be, don't be afraid to take risks. Do something that looks a little weird. People might go, I'm not really sure that makes sense. But those are the areas, if you don't take those chances, you find that you won't stand out over time. So with that, let's wrap things up here with a quick summary. There's a few things that I think stand out from what I heard from our earliest employees. 1, put people first. Like I mentioned, organizations exist to serve people. So understand what your people care about and work to serve them, whether your customers, your employees, your investors, you name it, put them first. 2, values matter. These are things that are going to have ripple effects as your company grows. So the extent that you can define your culture, the values that you serve is going to allow you to hire people and onboard people with those things in mind and grow in a way that is going to be much more smooth over time. 3, change is constant. High-growth organizations change all the time, so make sure you build a learning mindset. That'll help your organization adapt to the change over time. 4, be scrappy. Because things are changing all the time, it's really important to find solutions to problems that you have today rather than ones that you might have over a long period of time. And last, focus on the fundamentals. It can be tempting to want to do everything, but your organization is going to win by being great at 1 or 2 things in particular. And so make sure you get those things right. Thanks for having me here today. I hope you all learned something, and enjoy the rest of the afternoon.
afternoon, everyone. It's really good to be here with you today. But I'm going to start by reflecting back on 2005. So 2005 was when I landed my first job as a sales rep. I was thrilled. It was so exciting. I had finally gotten to this place in my career where I was going to be there helping the customers, working with them, and hopefully making a lot of money. I'm standing outside my boss's office, and a whole crew of people comes out, 2 of them crying. What is going on here? That was back in a time where we used to beat up our sales reps. We had people who were the high performers, and they were riding high, and they were getting all the accolades. Their names were in lights. They won every spiff. They were on the trips. And then you had the people crying. In fact, we used to have to do our calls in front of everybody else so that we could get called out for all the things we weren't doing correctly. I don't know if any of you experienced this or if you experience this today, but we have a feast and famine culture in most sales organizations. And what is this leading to? This is leading to 60% of sales leaders anticipating that their teams won't be able to hit quota. I was scrolling through my LinkedIn feed earlier today, and I actually saw another quote that said, CROs think only 6% of their reps will meet their individual quotas this year. And when you ask the reps, they feel like we're not meeting it either. There has to be a better way. I remember going into one of my last roles, and I said to the team, hey, show me our top performing reps. I want to get to know them and learn what they're doing, and is it working or is it not working? And so they sent me a list of the top performing reps, and they were at 80% of their number for the year, 82% of their number, 83% of their number. Not a single one of the reps in this organization had met their quota the previous year. But the company was doing well. The company had met their targets, and they were celebrating, and we have this vast, vast gap between the company winning and the sales reps suffering. And we see this all the time in tech and SaaS, where the growth is so high, yet reps aren't meeting their target. How can we leave them behind like that? Well, it's easy. We say, we set the targets super high, and then they'll get further than they ever would have gotten if we hadn't set the target that high. But that doesn't work, because they're not with us. They're not creating that success. We're not a team working together towards this common goal. I did work at a company that believed this. They believed you set the target so high, and it was a top-down quota setting process. So I got the number for the team, and I looked at it, and I looked at it some more, and then I brought up some spreadsheets, and I did some calculations, and I couldn't figure out how we could get to the number. So what did we do? We actually reframed it. We reframed it to growth. If we get to 40% growth, that is going to be super successful. But we shouldn't have to do that. What if we changed the paradigm? What if we expected all of our reps achieved their quota? And we did our planning that way, and we built our organization that way. Melissa, no, we couldn't do that. We have models. And our model says that only 50% of reps can meet their quota. That's how all the numbers make sense, and that's how we don't pay out too much commission, and we achieve our target as a company. How does that feel to a rep, to come into an organization and say, like, we're betting against you? We have set it up so you have a 1 in 2 chance of meeting your OTE, of paying your bills, of sending your kid to university. How motivating is that for a rep? But it's what we do. So how did I get to thinking differently about this? I had a call about a year ago that kind of slapped me in the face, woke me up. I was talking to another CRO, and she said to me, "Oh no, Melissa, we do our planning so 100% of our reps can achieve their quota." And I was flabbergasted. I had nothing left to say. I just said, I don't understand. How does that work? How do you pay people? How do you not go under? And she said, well, we've organized it that way. We actually have a reverse buffer. So I'll explain what I mean by that, because not every organization does buffers. But if you do buffers, I'm sure you do it where all the reps have a target, and then the manager target is a little bit less, and the director's target is a little bit less than that, the leader's target is less than that, and the company target is less than that. Why do we do that? Because we are betting against our reps. We are creating scenarios where the company wins, but the people doing the hardest jobs don't win with us. What this organization does is they say, here's the reps number, and the manager has 105%, and the directors have 110%. They are betting for their reps. And what that shows is this wonderful environment where people feel like they're set up for success, that they're expected to win. And the psychology of someone expecting you to win is totally different than knowing that we've set it up for half of you to lose. And so this has totally changed my mindset personally on it, to where I'm starting to think more and more on what can we do differently for everyone to be able to win, for us to all win together. What would that do for our culture and our environment and our growth as a company? And so we start out by saying, invest in self. The development for each individual to develop their skills, to be able to attain their targets. After you're investing in yourself and developing yourself, then it's about invest in customer. And as we pour all of those learnings and all of our great skills into our customers, then our company can grow. And that's the stage in which we do it. Because you know what? For the vast majority of reps, I don't think they're lazy. I don't think they're trying not to attain their targets. They want to. But what we're saying to them is, go attain your target, and not outlining how to do that and what that would look like. We're the lazy ones. We say, let's hire great reps and they'll be able to figure it out. Anyone in this room heard that or said that ever? Thanks for being honest there. Yeah, we've all said that. That's the whole point of the hiring process. Get people, they'll figure it out. But why would we want them to use all of their energy out there in the deep end of the pool trying to figure it out when we're the ones who should actually be figuring it out? And that's where being a SaaS organization is a beautiful place to be. Because when done right, a SaaS sales organization is extremely predictable. It shouldn't be complex. It should be simple and straightforward. And a little secret is that just because you're selling SaaS does not mean you have a SaaS sales organization. So what does it mean if you're setting up or if you're in an organization that has a broken SaaS sales model? One is it's not predictable. You have this feast or famine environment of your reps. And when you have some reps blowing it out of the water and other reps who aren't, and this cycle of performance management and people leaving the organization, you can't have the predictable model that is kind of the cornerstone of being a SaaS company. So you want to think about land and expand. Sure, everyone in this tent has heard land and expand. But in a SaaS organization, how do you know if you have the right land and expand model? Well, there's kind of two choices. You are encouraging and motivating, supporting, compensating your reps for the $100,000 deal. Or you're doing all of that for 10 $10,000 deals. In a land and expand model, we really want to create a system where people can get the $10,000 deals. Obviously, I'm just using those numbers for rounding purposes. But you want them to have as many deals as possible so that you're growing your customer base by which you can expand it. That one $100,000 customer may churn, may not have any growth left in it. And so you're not setting up this trajectory of being able to grow every single quarter and every single year the expanding customer base that you have. The second piece is pace. You want to create a system that has a fast pace. So you might have some reps who are saying like, oh, there's no good quality leads in here. I'm waiting for those good quality leads to come. Why won't marketing give them to me? But what we find is that it's quantity that leads to quality. And so having that pace of conversations with the leads and conversations with your customers is when you're going to uncover that really awesome, amazing deal. And the great news is you'll get a lot of other deals in the process. And you might come across a lead that you may have just pushed to the side, and then it's coming back again. The third is metrics. When we think about setting up this predictable SaaS sales organization, it is all about the metrics. Because when you have land and expand and pace, it's the math that helps you to know whether you're on track or whether you're off track. It's not a big enterprise software where we're always talking deal by deal by deal. Because ideally you have so many deals that that's not the way that you manage them. So thinking about the metrics that matter, That can be things like pipeline velocity. Or it could be things like the number of meetings that people are having. The key is that they are leading indicators and not lagging indicators. Because with the lagging indicator, it takes too long to figure out that something isn't going right. So if you're measuring win rate, for example, you're not going to know that you're behind on your win rate till the quarter closes. And so that's too late to make the adjustments and pull the levers that are required to get back on track. And then the last piece in the scalable SaaS predictable model is the playbook. This gets back to what I was saying on, we tell people, go get your number, figure it out. There are organizations that have put playbooks and processes in place that actually tell a rep, if you do these things, you will be successful. And that is the way that we're able to enable and empower each rep to have success. We set them up for success. We believe and we've set our plan that they're expected to get to their number, but we give them the roadmap on how to do it. It makes the coaching so much easier too, because you can look at the playbook and you can know, did they do this? Check. Did they do this? Check. Did they do this? Nope. All right, this is where I have to lean in with them. And so it's not about saying, this person just needs to leave the organization because we're out of ideas. We're able to map it back to the playbook, and then we can constantly iterate on that. And because our great reps don't have to figure it out on their own, they're figuring out how to make it better. Right? Instead of them starting at 0 and then trialing and erroring, they're already starting at the 80%. And then they're using their awesomeness and their excellent skill set to move the entire organization forward. And it's a virtuous cycle. We talk about, and there's been so much written lately about the Great Resignation. Right? And many of us are probably feeling that, where people are leaving and there are so many jobs and they just want to do something different. That puts a lot of pressure on your business and your model. So we're thinking about it in a way of, when people win, people believe they can win. And when you have more and more people in your organization feeling that they're set up for success, they're no longer sitting back with their arms crossed and saying like, oh, our product isn't working. Or if only the features were better, or if we could catch up to our competition. We have people leaning in and they are winning and they're staying longer. And this is what we want, because in the SaaS sales model, the people metrics have the greatest impact. So we get distracted by all the things out there, whether it's the product or the leads or the events or what have you, instead of focusing on the things that we can control. And that's these people metrics. And so I want to start by saying, we all need to know these. And why do we need to know these? Because these are key inputs into our plan. I've seen some organizations falter because they take their attrition number and they take the number of reps they have and they multiply it by their quota. Great, we have 10 reps and $1 million quota, so our plan for the year should be $10 million. The end of the year, you're going to be like, wah, wah. That is not going to work because people don't stay, and then it takes a long time to fill them. So what happens when a sales rep leaves the organization? Well, duh, Melissa, we backfill them. And sales reps, in my experience, are treated as disposable resources. Like there is an infinite amount of them out there, and if one isn't working, we'll just get rid of that one and we'll bring the next one on. And that's not true. We are running out of sales resources in the tech space. It's one of the reasons we're all just stealing them from each other. And so we want to think about how do we keep them and not have this attitude of just moving them on if they're not successful. Because remember, we set them up to not be successful, right? We're the ones who said only 50% of you are going to meet your number. So if you're buying into all this, and you might say, like, I don't, that's not how the world works. Some sales reps are successful, some aren't, and I love that. I love the dog-eat-dog world of sales, and that's what makes it great and fun. You're on this high, then you're on this low, then you're on the high, then you're on the low, then you're fired. So if you like that, go for it. But if you're saying, like, maybe she's onto something, and what if we did want to create this environment where everyone can win and we're all winning together and people are set up for success and we expect them to be great, how would we do it? So we must create this culture where people feel like they matter, where they feel like they have an impact on the organization. Any engagement survey you look at or any article you read about what keeps people, it's about feeling connected. It's about feeling like they have a small part in the success of the company. And so we have to do this if we want to keep our people and drive our business forward. And so I said at the outset that I'm new to this. I've only really been on this journey myself for about a year. I was the person that was beating up the low performers. You have to do better. You stink. You're lazy. So it's been a transition for me, I'll say. But so what are we doing at Hootsuite? Because at Hootsuite, we have made a commitment to this transformation. So much so that we have set a target as a company that we shout from the rooftops that everyone is aware of, a target that 100% of our reps meet their quota. We are far from that. When I came into the organization about a year ago, we had this old school environment that I was sharing about. And so every single quarter, we're measuring how we've been able to move the needle. And so we say, and every rep knows that my leadership team is accountable to 100% of reps meeting their quota. I measure it. This is the dashboard that I look at every single morning. Before I look at our bookings, before I look at how things are converting, I look at this dashboard. How are all of our reps as individuals doing? How have they moved week over week? How are we able to get them to the number? Which leads to the third thing that we're doing. We have a program that we launched called Lift Up. And so in the past, I had programs that were like beat down, manage out. If you're below 25%, you put them on a performance improvement plan, which was really code for you're going to be gone in 30 days. Instead, now we have this Lift Up program where any rep who is below a certain threshold get their managers together, and we talk about what are the things prohibiting this rep from success. We work with our sales enablement team to provide extra resources. But you know what? Like, it takes a lot to build back trust. Reps are a little bit uncertain about this. We tell them the Lift Up program is us putting our arms around you, giving you a hug, helping you out, getting you the support that you need so you can lift up and win with all of us. I was talking to a manager recently, and he said to me, you know, Melissa, I was really taken aback. I was talking to this rep in the Lift Up program, and he said to me, how much time do I have? Because that's over the years what had been beaten into him, that this was just another code word for you're on your way out. And so we have to build the trust back so reps believe we're actually trying to help them, so that they can be vulnerable and share back with us that they're having a problem, or they're not sure how to self-source or prospect, or negotiation has been difficult for them. Because until we build the trust with them where they believe that we actually want them to be successful, it's hard to get to the root cause and help them in order to do that. And then the next thing we've been doing is creating our rewards and spiffs so that everyone can win. So a lot of times in the past history that I've had, we've set up spiffs that say the top performing rep gets a trip to Bermuda, or they get a weekend away, or any of the things we put out there. But it's always for the top rep. Maybe we have segments, the top rep in commercial, the top rep in enterprise, or EMEA, but it's always for the top. And in reflection on that, that's very exclusionary. You're competing with your friends and the people next to you, and there's only one spot for someone to be declared excellent. And so what we do is now we have all of our spiffs and trips set up to be everyone can qualify. So if you meet a certain threshold, you can be a part of it. And we hope that that creates this environment and spirit where people work together, where they know the more the merrier. And so that's something that's been a change. And then finally, leaning in on the managers. We've started recognizing our managers not on their percent to quota, because the feast and famine environment, a manager can have someone who's at 200% of their number and everyone else is at 30%, and they're meeting their number and they're being celebrated. The purpose of a manager is to help each one of their reps to achieve their target, not just one and leave everybody else behind. So now our expectation of managers is percent of reps on their team who achieve their quota. And we measure them and recognize them on individuals getting to their number. So we had our top manager last quarter who was recognized. He had 100% of his reps achieving their quota. Now, we just had one, but it's a journey, and we're on the way to be doing that. And so I will leave you with kind of 5 takeaways as you think about creating this culture and environment where everyone can win. The first is have a formula to drive success. This is the metrics I was talking about, knowing what metrics drive the performance, the leading indicator metrics. It's also the designated playbook and process that will get people there. So whether you have a huge sales organization today or just a couple, or you haven't started your sales organization, please do not depend on people figuring it out. That is our lazy way of saying, please do our job for us. Take the time to figure out what works and lay out that pathway to success for your team. Then looking at fair comp plans. I didn't talk too much about this, but this is also a change that we recently made, where we were noticing that based on the OTE model and how people were paid, people were getting paid different amounts for closing the same amount of dollars. So we didn't think that was fair. So what we did was we said, hey, everyone who has this dollar amount quota has this much in variable comp. And so now every single rep in the organization knows that they are being paid fairly and equitably for the work that they're contributing to the organization. And then changing expectations of managers. So this is what I was talking about of, are managers successful if their people aren't successful? You have to decide what works for your company, but for me, it was pretty clear that a manager's role is to enable, empower, and help their people to achieve success and greatness. And the last one is an acronym that I introduced probably in my first quarter at Hootsuite, which is GIAT. Because in tech, we don't have enough acronyms now, so I had to add another one. So GIAT has become our rallying cry, which is give it a try. All these great ideas come to the table, and everyone has a reason why it doesn't work. We tried that before. You don't know our industry, blah, blah, blah. It doesn't work. So what we try to do now when a new idea is brought to the table is we say, let's first start by talking about why could this work? And that opens up so much more productive conversations. Why could this work? What if we gave it a try? And then I have an acronym that goes with it, which is too long to actually remember, but it is, what's the worst that could happen? And just asking that is so powerful to say, what's the worst that could happen if we gave it a try? And so I leave you with that. Creating a culture where everyone matters to your organization. They feel it, they know it, you've set them up that way, and why not give it a try? Thank you very much.
everyone. Thank you so much for being here. Thank you for having me. I am super excited to talk about marketing at Klaviyo and generally how to build a hyper-growth marketing engine. So before we get in, I'd like to take a little bit of time to introduce myself. So my story is interesting. I started my career as an engineer, and to be honest with you, I was really bad at it. I was probably one of the worst software engineers you could meet. So I called myself a failed engineer. And then by a long kind of circuitous route, I ended up in marketing. And for the longest time, I didn't really believe in the power of brand and storytelling. My whole focus was growth, performance, data, automation. I just loved that shit. And then after a long time, I started to think, oh gosh, I can't really change any consumers' minds with all of that stuff. If I really need to understand customers' aspirations and figure out how to emotionally resonate with them, I really need to understand brand. And that's when I kind of understood the power of brand and storytelling. And so I was able to bring the two kind of halves of marketing together. So I call myself a reluctant marketer just because I came at this at a kind of a zigzaggy way. And today, my role is focused on helping build this engine. So I think of myself as a scientist who's also a marketer, who's trying to bring the data and the science and the art and the creativity together to achieve the best outcomes possible. So I've kind of gone around a little bit. So I've worked in hyper-growth companies, big companies, small companies, not hyper-growth companies. It's been a lot of different flavors. And the one thing I will say is hyper-growth companies are just a completely different animal. The kind of decisions you have to take, the kind of choices you have to make, the kind of trade-offs you have to make are not the same as in any other kind of growth environment. So I'm hoping I can share with you all some of the things that I'm thinking through and some of the things that I'm building at Klaviyo and what I've built in the past that might help. So one quick thing about Klaviyo is, before I joined, we were a very, very heavy word-of-mouth driven company. So our product has an amazing product market fit. We have tons of raving fans. They spread the word. We have this beautiful, virtuous ecosystem, loop of people who talk about us. They come back, and more people come. But marketing was completely in its infancy. And so my mandate from our CEO and the board was figure out how to make this more of a professional organization. And so you have this company that's already growing crazily. On top of that, you come in and you're trying to build a marketing engine to go from 0 to 60 at the same pace and the growth of the company. It's a pretty interesting and unique challenge. So I wanted to talk about some of the lessons I have learned and some things that I've kind of put in place as we started to build this, what I call the agile, modern marketing engine. So let's dig in. So the first thing for me is align with the CEO. I mean, this is fairly obvious and straightforward. The thing I want to point out here is what people don't realize is how much of this has to happen and how early on. So to be honest with you, almost every company that I've done in the past 3 years, or 3 companies or so, I started this process of aligning with the CEO in my interview process. It's how deep that gets. I start digging into what is the company strategy, what is the product strategy, what is the product vision, what is the path to market leadership, what are the different go-to-market options, what are the assumptions we are making about the market and the business and all the kind of stuff. And so this is what is going to create a really strong foundation and grounding of how the company was built, what were the principles the company was built on, what is the principles the product was built on, and what we see as the extensibility of the product and the platform. What I have found over and over is if you have a founder or a CEO with a particularly large vision, they're thinking 20 years out. They're thinking big, far-reaching, wide kind of visions. And it's the job of the CMO to bring it down to the 1 year, the 5-year mark, and to really figure out how to distill that down to what we can do now, tomorrow, 3 years from now. So there's a lot of stuff there around how to really get into the minds of the CEO and the founder. The other interesting thing about this is there is a lot of stuff to figure out with the CEO on what your communication style is. We do a lot of things together jointly to think about the category, think about the brand, how do we position the brand, how does the brand reflect what the company should be. And if you're not communicating seamlessly and in a certain flow, it's just really hard to get on the same page. So one of the tips that I have used is, I have weekly one-on-ones with my CEO, who's Andrew Bielicki. And then that one-on-one is just generally to focus on the here and now. This is the decision we've taken in marketing. Here's some of the stuff we're doing. Here's the progress update on a couple of things, etc. But then I also set up these mind meld sessions with him on a completely ad hoc basis. And that's like 2-3 hours long. It's what we call blue ocean thinking. And those topics might focus anywhere from how do we think about this category to what do we think the impact of blockchain is going to be on our business. So it's as broad and far-reaching as that, because that's how you start to really get connected. Another important thing not to forget is very, very important to know what is the role that your CEO wants you to play in the leadership team. There's marketing being kind of amorphous and fluid. There's almost always a different role that you're expected to play as a head of marketing in those leadership team meetings. So super important to get aligned and coordinated on that. But in parallel, you also want to start thinking about your team. There's, as I've built teams from ground up, the one thing that's been really, really clear is obviously hiring. And again, that's super obvious. But the caveat or the nuance to hiring is this, which is you have to hire at the right level for the context you're in. Meaning, there are some contexts some functions where you need to bring in the doers, the people who can roll up their sleeves and get it done. There are some functions where you have to bring in the strategists, the people who are going to set the vision and the strategy and think about how to lay the foundation for a lot of different things. And I've made mistakes on both ends. I brought in people that were too junior, which meant that we couldn't do any of the strategy stuff. And then I brought in people who were too senior, which meant we couldn't get any of the urgent things done. So you got to figure out how to right-size the team. My first hires at Klaviyo, the first 5, were my head of brand, my head of product marketing, head of performance marketing, head of self-serve, and my head of analytics, ops, and research. And there's a reason for those being the top. They are all what I would consider really strategic functions within marketing that you want to bring in a pretty senior level who can then think about what the next 2 to 3 or 5 years looks like. And then I call out this thing called talent dense organization. Everybody in my team right now is focused on hiring people who basically exhibit 4 characteristics. One, they have to have some level of strategy or strategic thinking. They have to be able to roll up their sleeves and get things done, even at the size that we are. They have to demonstrate agility, because at a hyper-growth company, nothing is constant. Nothing is static. Every day brings on a new challenge. Every day there is a new problem to be solved. And then the last one is EQ. Especially in high-growth environments, stress, there is nothing like a non-stressful day. Every day you're going to have all kinds of challenges. And because it's so fast-paced and dynamic, you need to have people who are centered, grounded, who can have the right kind of communication if needed, who can push when needed, and there's a whole bunch of things around that. So I personally have always preferred EQ over any amount of IQ, because that's what makes strong teams. The other thing that I want to point out is you cannot operate in a silo. So what I do a lot of the times is make sure I build these communications protocols with my head of HR, CFO, my head of product, and so on, because they, at the end of the day, they are taking your vision and amplifying it to the rest of the organization. Last thing on this, I have made the mistake in the past of growing faster than my process. What I mean by that is we scale up so quickly. We bring on all of these amazing marketers. All of them are going to need tons of things like creative and assets and campaigns that they want to run. And there's a sudden explosion in output. But if you're not organized, when that goes out in the market, it is sheer chaos. You're not telling a compelling story. You're not putting the right kinds of things in place. And so without the right kind of processes, you're not going to get organized, particularly in a high-growth environment. So don't grow faster than your process, and make sure you're always thinking about, if you have 10 people today, how are you going to when you get to the 10x of that number of people, does your process scale up along with you? It's a super, super important kind of future casting skill to have. The third one is, so you have the founder and the CEO on the one hand who has a vision. You have the product team on the other hand who have a vision. You have the sales leadership team that brings a certain level of vision. Your job there is to be the person with the best pulse on the market. You have to bring the market realities to bear to the company strategy and say, is this actually landing the way we want it to? Are we making the right assumptions about the market? Do we know for sure that our market segments in this way that we want them to? Do we know that these feature sets are going to be useful to the audience that we want to go after? So there's a whole lot of market intelligence that, as marketers, we have to bring back to the organization. So what I tell my team is, we have to be the experts in customers, customer attitudinal segments, meaning how they think, what their mindset is, how they are thinking about different products, all that kind of stuff, and then customer journey, where they are in their customer journey. So it's not enough to just look at demographics. You have to get deeper into attitudinal segmentation. So I don't know if you've heard of this framework called Where to Play and How to Win. It was created by A.G. Lafley, who was the CEO of P&G. It's a great framework. The Where to Play really defines your market, where you should put your bets. And the How to Win talks about the specific things that you can go execute towards. So in my team, we follow that. The first things we kicked off with our head of research was the TAM, market research, segmentation, and we do a lot of different things around the customer journey, customer journey research studies, specific questions into why do these people switch from this solution to this solution. So we do a whole bunch of things to surround ourselves with customer insights and customer data. And in doing so, we've become kind of the central, grand central station, if you will, of all of the customer insights. And we kind of tie it with what the CS team is hearing, what the sales team is hearing, what our product team is hearing, and we merge everything together to create almost like a 360-degree profile of the customer. I cannot tell you how important this has been in my past. In a lot of the product-led companies, as you can imagine, there is a strong gravitational pull towards being very, very feature-centric as a company. So most companies are thinking, I'm just going to build this feature, and people will come. I'm going to throw it out there, give it to marketing, and they're going to figure it out, and people will come. Might be true, but a lot of the times, you're still losing a lot of people on the edges, customers, that don't necessarily care about that product, might be interested in something else. So it is the job of marketing to kind of shine a light on the market and the people that you're underserving. All right. Big question that we constantly talk about we have a little CMO group. Big question we talk about is, how do you balance the short term versus the long term? You go into a new role, almost within the next 6 months, you're going to be expected to show short-term results, whether it's MQLs or pipeline or customers or leads. But at the same time, you know that you have to build for the long term. You know that you're going to be expected to deliver 18 months from now. So how do you do that? And the way that I think about it is, you have to operate on two different, what I call motion reels. The one motion reel is here and now. So the next quarter, next month, next week, what are the things that we are doing? The second motion reel is the next 12 months out, 18 months out, what are we trying to do? And the job of the CMO, in my opinion, is bridging the two. You're always trying to bring the two together, saying, OK, we are doing all of this stuff that just kind of adds up to the long term. But the other thing I've tried to do, which has been pretty successful, is I challenge my team to come up with one low-hanging fruit opportunity per month. So every month, each of my directs and me, we sit down together and say, what can we do that we can jump on this month, that we can go find some success in, or even fail for that matter, but learn something from? And I can tell you it builds a tremendous amount of confidence in the team because you're starting to kind of accumulate those wins, and that just creates this magic word called momentum, which when you go into a new role, you need. And then this is a pretty dramatic statement, but when you go into a new role, you've been basically hired because you know something really, really well. But in the last 3 companies I've been at, every single time, 6 months in, I'm like, OK, throw out this old playbook. We have to create something new. Because you're outgrowing that playbook so quickly that you have to be very agile in thinking about what's worked for me in the past, take some of those learnings, some of those timeless classic things, add on a few things, and create new ones, and definitely discard a few that don't work. For instance, one thing that we found is self-serve motion for us. I've always felt it is one of the most incredibly powerful go-to-market motions. In a previous company, what worked as self-serve is actually not working in the same way here. So we've had to change our definition of self-serve. And that's the kind of playbook that we have to create. All of this is on a bedrock of experiments. So I asked my team to think about how do you create the right experimentation mindset and DNA in the company. So with each of the stuff that we take on, we are always looking at how do we create an experiment based on either some kind of data or gut-based hypothesis, and then how do we create what I call a stacked experimentation culture? So run the experiment, learn, fail, or improve, and then use that to go on to the next one, and it just keeps stacking up. And the sum total of that becomes this institutional knowledge and intuition that is extremely critical for any marketing team, however data-oriented it is. So this brings me to the last point on this slide, which is intuition is extremely, extremely critical, particularly in a high-growth environment when you're having to take almost like lightning speed decisions in some areas. You don't have the data. Every problem is new. Your every day brings on a new either opportunity or challenge. You're going to have people who can use all of the information and the historical data and say, all right, I think these things have worked for us, so let's go try this thing. And so that's the kind of culture you want to create in every level of the organization. And the last one is a little bit of a personal kind of anecdote. I have been extremely bad at this, which is I've not prepared myself for a roller coaster. Every single job I go to, which in one of these hyper-growth environments, I'm like, oh, I'm just going to go do this, and everything is going to be fine. But you are going to have ups and downs. Things work, things don't work. Every single day is a new day. So what I tell my team is it's about this idea of you're forming and norming, right? All of us are familiar with that. But instead of storming, we just have to get to performing as quickly as possible. And then from performing, you have to get to outperforming as quickly. And that's kind of the gradation or the life cycle that we have to go to. And in all of this, my role as a leader is holding both these ideas of compassion and accountability. When I mean compassion, it's about making sure that people are delivering at their best. They're getting the best out of this experience. But at the same time, you also want to make sure that you're holding people accountable. And those two, for the longest time, I didn't believe they could go together, but they do. You have to have that kind of dichotomy. It's OK to screw up. And man, I have been there so many times. In fact, I just had a conversation with my CEO a couple of weeks ago where he said, everything is going great. How are you feeling about it? I was like, yeah, I don't think I'm doing that great. And so he asked me why. I said, there's so many things I wish I'd done better or could have. I wish I'd known better. And he said these amazing words, which is, look, you're trying your best, but we are on a journey together. We are on an adventure together. Don't ever forget that. And that's the kind of culture that I want to create in my team, which is, it's about an adventure. It's about, you don't really know where you're going. You have to be focused on the goals to get there, but consider this as a really big adventure that we can go after. So I tell my team about this idea of hold your goals tightly, but your path lightly. Because the path is always going to change. As long as you hold your goals really close to your heart, it doesn't matter what path it's going to take, you'll get to those goals. So that's basically some of the big lessons I've learned and some of the things that I wanted to share with you all. Just to recap, even though this is obvious, getting aligned with the CEO and their vision is extremely critical for the marketing team, particularly when you're thinking about creating or recreating and redesigning a brand from ground up. Building the right size team, hiring the right people who can both, what I call, shoot and aim and shoot at the same time, it's extremely critical. It is not an easy thing to do. Hiring generally is very hard, but hiring the right people is exponentially hard. But that's where you get the highest leverage, once you have the right people in the team. Building the right processes that go alongside or that wrap around the team, again, critical, because otherwise it will end up in chaos. Taking on the ownership of the customer and the non-customers, and more importantly, actually, what I would call the rejectors, the people that have rejected your product, is extremely important as well, because you must know the market more than anybody else in the company. Balancing the small stuff with the big stuff, running on 2 speeds, so the here and now, and then the medium to long term. Again, another very crucial skill, both as a leader as well as the skill that you want to bring down to your people. And then finally, creating a playbook, like really thinking about what's going to work in this environment, what are the levers, what are the growth tactics that are going to work, and creating that playbook for yourself that's unique to that situation is super important. And finally, don't forget, this is as much about the team as much as about you, and you have to be careful about how you manage your own time, energy, and the amount of work that you're putting into it. Because if you're not taking care of yourself, you may not be taking care of your team as much. All right, that's it from me, folks.
Hi, everyone, and thank you so much for coming to this session on such a beautiful day late in the afternoon. I really appreciate you coming to talk about how to attract, hire, and build a more diverse sales team in your organization. For anyone who hasn't heard of Handshake, we believe that we can help every student and alumni find a great job and build a meaningful career without any experience, no connections, and no luck required. We know that talent is evenly distributed across the US, but opportunity is not. And so at Handshake, we want to make sure that no matter what someone's race, ethnicity, or socioeconomic status is, that they're able to find meaningful employment, and Handshake can help support that at scale. So before I get started, I wanted to talk about something that one of my AEs said in a team meeting while I was preparing for this presentation. He opened up to the team and he said, I came to Handshake because I want to teach employers that people are great not despite their uniqueness and differences, but because of it. And it was such an impactful statement at that time, and we were all kind of quiet for a minute, and it was like, wow, that's what we do at Handshake. We make impact every single day. We go out there and we help employers know how they can be better. And so as we start to talk through this today, I hope that resonates with you as much as it did with me. And that as you leave this today, you'll have a new passion for helping find diverse talent, bring them into your organization, and making sure that we're all looking to make that change. So I've been building top-producing sales teams for a really, really long time. It's challenging, but it's one of my favorite parts of my job. And it's something that's so important. When I look at these pictures, I think about all the success that I've had over the years, and all of that success has come from the people that are a part of my teams. And in most cases, not just one team. In most cases, they've been on multiple teams, or they've followed me from company to company. And I talk to people all the time about how to build a top-producing sales team, and people say, just go out and hire a bunch of top producers. It seems like it shouldn't be that hard, right? But it really is difficult. For all of you who are doing it, you know how difficult it is to build that team. So today I'm going to talk about not just diversity, but how to attract, hire, and build a top-producing team, because I believe that the secret behind that is through diversity. So over the years, I've watched many sales leaders go out and say, Brian's my top producer. I'm going to go out and hire 25 people that are just like Brian. And essentially what they do is they hire the same profile person just over and over and over. And what starts to happen is that the people within that group can't learn and grow from each other because they're all good at the same thing and they're all bad at the same thing. So what starts to happen is that instead of helping each other, they start to compete with each other because that's all they're able to do. This is when you end up with one of those highly competitive environments that no one wants to work in. It's not collaborative, and it's just quite frankly not fun. So when you start focusing on hiring people who are different, things like different backgrounds, different tenures, different locations, different race, different ethnicity, this is when you're going to find a group of people who are all good at something different and they're all bad at something different. And when you bring that group of people together, it creates a culture of growth, and you start to have a growth mindset within your organization. People know when they have a question or they need help with something, who the right person on the team to go to is to learn that. It helps you up-level your team with every single person that you add, and you can create that as you continue to add more types of diversity throughout your sales organization. So over my career, I have learned a lot. I've certainly made a lot of mistakes in my time, but one of the most important lessons I've learned has been around truly embracing people's differences and understanding that there are so many ways to be diverse. I think when we hear the word diversity, many times we immediately think about internal characteristics that you're born with, like gender, race, ethnicity, and age. But there are so many other ways to be diverse. Think about characteristics you weren't born with and things that can change over the course of your life. So some of those are socioeconomic status, religious beliefs, education, even your location can change that. So each of these experiences as you go through life will change your experience and who you are. It's important that as leaders, as we build teams, that we recognize those different experiences and embrace them. If you want to truly be successful, you will need to embrace all kinds of diverse talent within your sales org or any organization that you're building today. And then you'll have to make sure that that environment is equitable and inclusive to support them in an ongoing manner. So we're going to touch on all of that today. So I'm going to talk a little bit about the progress we've been able to make at Handshake since I joined in January of 2020. You can see here that when I started, we had 9 enterprise AEs on the team, and most of them were white males. Most of them lived in San Francisco. They're about the same age, about the same tenure. Kelly was so excited when I started at Handshake, just to have another female in the room. And I can't tell you how common that is on enterprise teams. So fast forward a year later, we had grown the team to 14 enterprise AEs, and we were able to actually equalize the balance of men and women on an enterprise team. For those of you who aren't in enterprise sales, this is highly unusual in this environment. And we were also able to add some race and ethnicity to the group as well. So fast forward 6 months, this is where we were at the beginning of September. You can see here that now we have more women than men on the team, something I'm very proud of. We've been able to add ethnicity and race, but so many other things as well. We've been able to add people from different locations across the country, different tenures, different ages, different educations, different experiences. And this is what truly represents a diverse team. When I joined, we had plans to only hire in San Francisco, New York, and Chicago. And now more than a third of our group is dispersed across the country. I'm going to go over some actual stats on the next few slides, but overall, I'm really proud of the progress that we've made at Handshake, and we still have some room to grow. So we're building the team out to 34, so I have 7 more hires that will continue to be really intentional about the way that we are looking and sourcing and talking to people about these opportunities to make sure that every time we bring an enterprise AE on, they're bringing a skill to the team that we know is going to up-level and help the team grow and learn from each other. So over the next few slides, I'm actually going to shift from talking about the overarching term of diversity to focusing on underrepresented groups, which we call URGs, which talks more about how they identify. So a lot of times we look at a slide like this and we think we know how someone identifies. But you really can't have that perspective, especially as you're looking to add people to your team. It's something that you need to be very clear about, very intentional about, and work with your HR teams to make sure that you understand the true self-identification, as you work to improve these numbers. So as I mentioned earlier, 56% of the team is female. For most of my early career, I was the only woman in the room, the only woman in meetings, the only woman on the sales floor, and I really didn't feel like I had a voice. It took me a lot of years before I really found that, was comfortable in meetings and able to speak out. I was lucky enough that I found men along the way who believed in me and mentored me and sponsored me, but I never had a strong woman sales leader at any of my roles. When I look at this graph on the right and I see the progress that I've made with the enterprise team, I like to think that I'm changing that type of sales environment and making sure that everyone in the room feels like they have a voice. So it's not easy to be a white woman standing on stage talking about racial representation. It's a conversation that so many of us are uncomfortable having, but we have to start being comfortable talking about this topic. When I was going through and prepping for this, I met with one of the leaders of our Wakanda group who supports Black individuals at Handshake, and she was like, absolutely, you have to go out there and talk about this. This is the problem, that we don't have these conversations and that we're not being more transparent and talking about this across our organizations. So when I started on this journey, we went on a mission to exceed the US Census data. We thought that is a great place to start. I talk to employers every day, and that's what many of them are working to achieve. So right now, we still have a little ways to go, but with our 7 hires and the pipeline that we have through the end of the month, I believe we'll be able to exceed that by the end of October. But when you look at this and you think about racial representation, you'll see that all non-white people are lumped into one group. And that's really not the way we should be talking about this. There's so many types of people when we start talking about people of color, and we need to start representing this and making sure that they all have their own piece of the pie and that they all have their own voice in the room. Getting to the point that we're at today was a lot of progress, but I'm still learning, my whole company's still learning, and I hope you're all still learning about these things and trying to be better. That's a big part of why I'm here today. If I can help any one of you go back and make an impact in your company, then this was worth it, standing up here after being in the house for a year and a half and coming and standing in front of a large group of people. But I've committed to my team and my organization that this is only the beginning. Like, we set the bar, and then we achieve the bar, and then we set a new bar, and that process just has to continue over and over again. If any of my Peloton family is out there, this will sound really familiar, but it's about progress, not perfection. It's about continuing to learn and grow, being really transparent about where we have opportunity, and then continuing to grow from there. So I'm not going to stand up here and tell you that this is going to be easy. Finding diverse talent is a challenge because of the numbers that you see here on the screen. But it's possible, and we can't use it as an excuse to not make change or to hide behind. For most of you in this room, you're leaders, or you come over challenges every single day. As a sales leader, if I don't have enough pipeline, I can't sit back and just say, oh, I don't have enough pipeline, I'm not going to hit my numbers. I have to go out there and find it. And finding diverse talent is exactly the same way. I'm responsible for it, you're responsible for it, your sales team is responsible for it, your C-suite is responsible for it, your CEO is responsible for it. Everyone has to start working together in order to make this change. We all know that hiring a sales team is going to be challenging because of the demographics that you see on this screen, but it is critically important that we start to put focus in this area and start to put numbers behind it. So I'm going to walk through some slides on why this is so important. Back in January, Deloitte did a survey of CEOs, and then 94% agreed that DEI was a personal strategic priority, and 90% agreed that they wanted to be a leader in the space. I mean, just think about those statistics. They're crazy, right? That's everyone. But you'll see here that they talk about diversity, equity, and inclusion. I want to point that out because I only have a half an hour today, and I'm mostly speaking about the diversity aspect. But equity and inclusion are so important to think about as well. As you start working through this, you'll start to hear terms like allyship, mentorship, sponsorship. These things are all really important that you begin to educate yourself and make sure that you're including them in your strategy. You can also see that 72% of CEOs plan to disclose their DEI metrics to the public. This is great news because if you're making an impact and making the change, candidates will come to work for your organization because they see that you care. Here's where it starts to become really important. Earlier this year, Dan Schwabel found that 70% of employees said that they want to work for a company that demonstrates diversity and inclusion. They're not asking for it, they're demanding it. We're in one of the most competitive hiring markets that has ever happened. And if you're not willing to invest in the things that your employees want, they're going to start going to work for employers who are. If that's not enough, and in addition to making your CEO happy and your employees happy, you want to look at the financial aspect. Data shows that if you are diversified ethnically, your financial performance will go up by 35%. And if you're diversified by gender, it'll go up by 15%. So I don't think there's anybody in this audience that doesn't want their financial performance to increase by 1%. McKinsey also suggests in this study that other kinds of diversity, like age, sexual orientation, and experiences, are likely to bring another level of competitive advantage for companies that continue to invest and attract top talent. So this is one that I'm obviously really passionate about, something that I talk about every single day. Gen Z is here, and most people don't realize that. They are entering adulthood as the first and most radically different group of people. They're racially different, they're ethnically different, and they're on their way to becoming the best educated generation yet. They turned 23 this year. And so they are going to be entering the job market in full force. And as the most diverse generation to date, they are demanding that employers are investing in this area, and they want to go to work for companies where the teams feel like them and look like them and where they know that they're going to feel included. So if you haven't begun to think about how you're going to attract, hire, and retain Generation Z, now is the time. So I hope by now this is something that you're thinking, okay, I should go back and make a change. I should start doing something to change this in my organization, but where do I start? The first place is to set achievable and transparent goals within your sales organization. So this is something that a lot of people skip, and they just start by working on brand or talking to their recruiters about how they're going to source. But really start and be very prescriptive about where you're trying to get to. If you only have 1 or 2 headcount to add to your team this year, it's going to be really hard to make significant improvement in this area. And those 1 or 2 hires become critically important in making the change. Once you've committed to something, make sure you lay out how much time it's going to take and what you're going to need to get there. Transparency through your organization in this area about how and when you're going to be able to achieve specific goals is really important. The employers that I speak with every day who are successful in this area are successful because they've gained buy-in from their C-suite and they have the full support for them as they go through and start to make change in their organization. Another thing that can really help is connecting with your ERG, your employee resource group leaders. They can help give you a different perspective and help you talk about how you're performing today and making sure that they're supporting you in what you hope to accomplish in the upcoming years. And if you want to get started with Melody here, just Google her. She has amazing content out there that can help you get started. Okay, so we've talked about setting your goals, and now you're going to go and start to achieve them. So how do you attract talent? This is the very first step, and it's so important. You have to work on your brand. And when you think about your brand, that means you, your website, your recruiters, any content that's out there, your team, your interview process, anything that would come in touch with a candidate from the time they start researching your company until the time that they would move to getting an offer. But here's where a lot of companies fall short. They go out and they update their website, and they update their social media, and then they wait. And that's not going to do it for you. It might help a little bit, but at the end of the day, you're still not changing. So the things that you need to do in your organization are a lot, very detailed. We've written a blog. I have it posted on my LinkedIn page if you want to see it in more detail. But essentially, you want to make sure that everyone in your team is helping. Everyone should be a brand ambassador and on board with the process. You want to make sure that you embrace personalization. So this is a big one. You can't send the same messaging to, I don't know, a black female in San Francisco as you would to an Asian male in Atlanta. You just want to make sure you change it so it really resonates with them. And for you, if you're in a sales role, it sounds a lot like prospecting, right? Writing cadences and templates. This is what we do for a living. Recruiting is a lot like sales. So you need to start changing what you're doing today to align with that. And then you need to be thinking about consistency throughout your process to ensure that everyone has an equitable experience. And this is something I will talk about a little bit more in the next few slides. But at the end of the day, elevate their candidate experience. You want someone to come in and feel like they're going to be included in your organization. You want to make sure that every interaction you have with them counts. This is your opportunity to tell your story. This is your opportunity to shine. So make sure that you're focused on what that experience is like. And the last thing is that if you are going to lean on your ERG leaders or other employees in your organization, make sure you're compensating them for going over and above. At Handshake, we recently started compensating our ERG leaders because they are putting in a lot of time and effort to make sure that they're helping us build our culture and just making the company better in general. So let's talk about, once your brand is elevated and you're going out there and you're saying, how can I source for more candidates? You have to start thinking bigger and thinking about pools of candidates that you're not accessing today. Gen Z is a great place to start. As I mentioned earlier, 1/3 of the global population. You can see that 1 in 4 are Hispanic, and nearly half are racial or ethnic minorities. So if you're not thinking about early talent today, this is an immediate place that you can add representation into your hiring pipeline. Consider hiring from areas that you haven't before. In the last 18 months, the world has changed drastically, especially when hiring enterprise and strat AEs. You can start to look at where the talent that you're looking for is located. It's amazing how much representation changes state by state, even county by county. So educate yourself on where the candidates are that you're trying to find. It can also help or hurt your efforts to hire from underrepresented groups. So if you're looking for a black candidate in San Francisco, you can see here, it's only 5% of the population. But if you move that search to New York City, now you're at 24%. And then if you go to Atlanta, it more than doubles. But if you're looking for an Asian candidate, then Atlanta's not such a great place to be sourcing. You'd be much better off looking at San Francisco. Okay, so we've talked about some ideas of how to find new talent in different areas across different types of pools. And now we're going to talk a bit about the hiring process. So you absolutely are going to need to do training on removing hiring bias from your hiring process. It's not just for your recruiters. A lot of people think, oh, we'll have the recruiters go through this process and that's going to fix it. Everyone needs to go through this process. You cannot overcome hiring bias or remove it from your process if you don't know it exists. Unconscious racism, ageism, and sexism play a big role in who we hire. Francesca Gino, a professor at the Harvard Business School, says that hiring bias is something that causes us to make decisions in favor of one person or group to the detriment of others. This is going to hinder the diverse environment that you need to build in your organization if you want to be successful. So when we align ourselves in images and things that we see, we start to have this hiring bias. So if you think about seeing women with careers in nursing or education and men with roles in C-suites, if you're interviewing for those roles, that can start to change the perception of who's sitting across the table from you or on a Zoom link today. Iris Bonet, the author of What Works? Gender Equality by Design, she talks about how seeing is believing. So basically, if we don't see male kindergarten teachers or we don't see female engineers, then we don't see how that person could fit into the role. And we may actually change the questions or the process that we normally go through. So you can mitigate bias as a hiring manager, and there are some really basic steps that you can put in place. You want to start by documenting everything and really aligning the team. You want to be very clear and explicit about the candidates that you're looking for and make sure everyone in the hiring process understands the part that they're going to play as they go through this. So at Handshake, we actually create a role playbook. It includes the job description, detailed competencies that we're looking for. We then write questions out for each interviewer that tie back to those competencies, and we even create a scorecard of what good and bad looks like as they go through the interview process. Then before the role even gets posted online, we have a sync. Everyone that's going to touch this candidate from beginning to end, sourcing, interviewing, whatever it is, they come to that meeting, and we make sure that everyone's aligned. So we know what good looks like and what bad looks like. And then every single week, we sync on the candidates that have come through the pipeline, and we talk about what was good and what was bad, and maybe how we can change that as we go through the next iteration. So if you can be deliberate and consistent in your process, it creates constant transparency. So it's very difficult for hiring bias to creep in. I can't say enough how important structured interviewing is, and I'm sure most of you in this room have been exposed to it at this point, but it's something that hiring managers generally struggle with in real life. When I do an interview, every single candidate gets asked the same questions every single time I conduct an interview, and it's really important in making sure that they have a fair and equitable interview process. It's very common for people who, as they're talking to someone, if you really connect and you like each other, you're going to ask much more casual questions because you like them, you're comfortable with them, that's natural for you. And when you have someone that doesn't have that same interaction, a lot of times you'll start to ask more challenging questions or different questions than you would have asked another candidate. And that's not fair to the people interviewing for the role. So it's important that you put this structure in place and make it easy for your hiring managers to ensure that they're asking the same consistent questions at every single interview. So along that same line, you should be thinking about the people and what their experience is going to be as they come through the interview process. So when I put someone through to a panel interview, it's because I believe that they're a good fit for Handshake and that they're excited about the opportunity. I want that person to see themselves on my team. I want them to feel like as they go through the interview process, this is a team that I want to work for. If you have structured interviewing in place, it's very easy to swap the people out because they're all going to ask the same questions and fill out the same scorecard. This allows you to make a more customized experience for your candidates as they go through the interview process. It ties back a lot to brand. The people that you put in front of this candidate in the interview process are part of your brand. So it's important that you continue to think of that. So we're coming up on time, and this is my last slide, but it's something that I am really passionate about. We've spoken about how to attract and hire diverse talent, but there is one more option. You can build it from scratch, from the start. And you can do that with SDRs. So your SDRs can be a really powerful place to add diversity on your team. You know, we spoke earlier about that Gen Z audience entering the workforce. So this is a great place to include them in a long-term strategy. If you invest in bringing people in their first or second role out of school, you can train them exactly the way you want. No bad habits. And then you build a true farm system within your sales organization. This will not only give you more pipe generation from having SDRs in seat, but it means you'll always be able to promote internally from a bench of people who already know your product, your systems, and are looking for that next step in their career. One thing that's critically important is that you have to build a solid onboarding and continuous education program if you're going to invest in this strategy and really building out your SDR team. But it will give you the opportunity to hire from a much more representative group of people and truly set yourself up for long-term success. So I've highlighted the key takeaways here, but I think what I'd really like to do is go back to the quote from Mohammed, my AE, at the beginning of this session. We teach employers every single day that people are great not despite their uniqueness or their differences, but because of them. I hope that as you go back to your companies, you'll make a commitment to yourselves, to your teams, to your organizations to make diversity, equity, and inclusion a top priority, not just in your sales organization, but in your entire organization. If we all begin to commit to making these changes and building more diverse teams, we're going to be more successful at the end of the day. So I hope that this has been helpful, and I'm happy to answer any questions about Handshake or anything else. Thank you.